To get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, you know, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing?
A sell-off on CDS fears, plus waves of protests in France cripple some critical services over the weekend, with more expected tomorrow, adding pressure on President Macron's push for reform.
Now, let's take the futures for the moment. Tom, we seem to have a quieter Monday, actually, which is very welcome, certainly than what we had last week. Futures pointing to higher start, 1.3% higher. We have a couple of central bankers speaking, but certainly we're not seeing the panic for now or anxiousness that we saw on the Friday.
Yeah, absolutely. Some moves over the weekend and over the last few days to reassure around the banking space coming through from those US regulators, considering further moves to shore up the banking system. And of course, the news that SVB is being bought, and then First Republic remains in focus. But again, regulators seem to be focused on ensuring that there is enough liquidity support for that bank. We'll see how that plays out. But a bit of reassurance coming through for the banking system, and certainly we'll be checking in and doing a deep dive across that sector just in the next few minutes and across this hour. Currently, solid gains in the first few seconds of the open here this Monday morning. The CAC current over in France, despite those protests and the political turmoil, the pressure on Macron, gaining 1.3% just in the first few seconds. Over in Spain, upside of 120 points, the FTSE 100 gaining 0.9%. All of this despite the fact that there's some softer data coming through from China. It's more around the relief picture when it comes to the banking sector. And of course, we have a number of Fed speakers later this week, and then crucially for the Federal Reserve, the PCE indicator, price indicator at the end of the week. Let's switch it on and see how things are playing out cross asset then. We had that focus very much at the front end on the 2-year yield. And for the context, you've seen about a 100 basis point move just in the space of about a month at the front end. In fact, around 2 weeks, 386 now. And you've seen moves higher in terms of yields just by 9 basis points. But that trend around the steepening of the yield curve, the most aggressive that we've seen in a month since about 2008, as investors bet on rate cuts and a recession towards the end of this year, pushing back on commentary from Jay Powell, and that tussle continues across the bond markets. Brent trading at $75 a barrel, just gaining 1% after pressure across the commodities space. Euro dollar at 107, and futures in the US pointing to gains of 0.5%. Fran.
Now, the chairman of Saudi National Bank, Al Qudari, has resigned. Let's bring Bloomberg's Youssef Gameld in Dubai with the very latest. Youssef, this is after he gave a pretty incredible interview to you about 10 days ago, which was one of the starts also of really the bank run on Credit Suisse.
Yeah, a dramatic set of events, arguably not a surprise, but given the kind of criticism he faced domestically in terms of social media and also questions being asked more broadly. Remember that the PIF, so Saudi Arabia Sovereign Wealth Fund, is a 37% stakeholder in Saudi National Bank. So you can imagine the kind of discussions that are happening behind the scenes. Here's what started all of this. Take a listen.
Absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
So unequivocal comments there in terms of a lack of interest to further inject additional capital in Credit Suisse. This was a as much as it was an evaluation opportunity, it was also about creating systemic integration, about putting Saudi National Bank on the global stage. And so this is a setback for S&B. At the moment, we're seeing stocks react to the news. We're down about 0.1% in the first 3 minutes of trade. But Mohammed Al-Ghamdi, who's been with Saudi National Bank for many years, takes over as the new chairman. Remember also that in terms of impact on the company itself, Saudi National Bank, I mean, this Credit Suisse check that they wrote is less than 2% of its market capitalization, but this is about credibility, and this is now about resetting the tone. Fran.
Yeah, thank you so much. Yusuf Gamal-Din there with the very latest, of course, on Ammar Al-Qudari, the chairman of Credit Suisse's largest shareholder, now resigning, he's saying, for personal reasons, Tom.
Yeah, and has the hangover from Credit Suisse been put in our rearview mirror? Let's check in on the banking space. Of course, the context around Deutsche Bank and the losses of plus 8% on Friday, CDS jumping as well. But in the session today, Deutsche Bank is regaining much of that loss, gaining more than 5% just in the first few minutes of the open. Let's check in and bring that stock to play here. Across the context, of course, the sector, the banking sector in Europe has lost around 18%, down about 18% in the last 2 weeks, just in the last 2 weeks. Citi, though, describing the Deutsche Bank sell-off as, quote, irrational, and certainly some of those losses being paired today. Gains of 6.5% for Deutsche Bank, Commerzbank, UBS and Barclays all gaining as well. You've had a bit of resolution, of course, around SVB in the US, and then news that regulators, officials and the government in the United States are potentially looking at expanding that emergency lending facility. Let's move the board on and see how things are playing out across the rest of the banking space as well. A sense of relief, again, at least at the start of this week. We'll see if that holds. Santander gaining 3.5%. Unicredit, HSBC and NatWest all up on the back of this news. Broadly across the sector, you're seeing gains of 3.3% across the banking sector here in Europe. Just in the first few minutes, again, the context is that you've seen losses of around 18% just in the last 2 weeks. So that's the picture across the banking space. There is relief. Whether it holds, of course, is the question. We're keeping an eye on the CDS as well for Deutsche Bank. Fran.
Now, Switzerland's banking regulator says it's exploring a possible investigation into Credit Suisse after how top managers ran the lender before its collapse. The fallout of the Credit Suisse saga continues to be felt across Europe's banking sector, with bank shares falling in European trading. Now, for more, let's bring in Bloomberg's Tom Metcalf. Tom, after the steep drops we have on Friday, as Tom was saying, things seem to be stabilizing a little bit today, but for how long?
Yeah, it's definitely sort of that rebound, and folk will probably be, as Tom said, breathing a sigh of relief. That sell-off on Friday was sort of, as Citi said, you couldn't really sort of read across anything into fundamentals, so it was purely sentiment-driven, and just goes to show how sort of nervous the market was. But then in US hours, you really saw that bounce back, and that's now continuing through. So I think, way too early to say Credit Suisse is in the rearview mirror. That is a huge sort of, it's going to roll through the sector for a while. But it does feel like kind of, sort of, the fear, at least on Friday, has certainly dissipated.
And so what do we make of this possible investigation then? What do we know at this point?
Yeah, well, my first thought was, it's a bit late for that, right? Like, Credit Suisse has already, been bought. And, I think what it really speaks to is that sort of the political sort of movement in Switzerland. So most of the public there seem to be pretty unhappy about this deal. And it looks like kind of the establishment over there is, making moves to A, try and sell the sort of merger, and B, also, kind of give themselves some cover for, letting this happen on their watch.
Tom, and we were just hearing from Yusuf, the Saudi National Bank chairman, the biggest shareholder, of course, in Credit Suisse, has resigned. Is the question, like, why did it take this long?
Hardly a surprise, right? In many ways, certainly in Saudi, people are pointing fingers at him, like, what? You've got to be much more careful, don't make those kind of blunt comments. Not a surprise. I suspect, you're going to see some personnel movements right across sort of the world of finance after Credit Suisse.
Okay, Tom Metcalf, thank you very much indeed for getting us up to space. A lot of news flow again across the banking space. We appreciate it. Now, Silicon Valley Bank has been sold to First Citizens Bank with all its deposits and loans taken over. That's after the San Francisco-based lender was seized, of course, by regulators following that run on the bank. The turmoil has impacted deposits for small banks across the US. For the details and the insight, let's bring in markets reporter Valerie Teitel. Valerie, what is the latest then from the Fed's deposit data? What does it tell us?
Look, Tom, we got this data late on Friday night showing that small banks in the U.S. lost 2% of their total deposit base the week of Silicon Valley Bank's collapse. It goes without saying that this deposit flight and the extent to which it continues is the major worry for U.S. regional banks as this banking crisis enters its third week. Now, we saw also from this Fed's data that they kept a lot of this money in cash. So in order to perhaps buffer for further deposit flight, a lot of that emergency lending was kept in cash. The question for the Fed is, does this cause regional banks to pull back on lending or to perhaps tighten lending standards? Now, the fact that we are seeing two-year yields rise in the moment, it maybe is painting a picture that the Friday data wasn't as bad as feared and maybe won't prevent the Fed from hiking at the next meeting in May.
Valerie, the Fed's data delayed. Any hints on deposit flight since?
Yeah, so the data is 2 weeks delayed. The more updated data we got is the emergency lending data. Now, it showed that the emergency lending was kept contained into the New York Fed district and the San Francisco Fed district. It didn't spread into other Fed districts. That's a positive. And Powell mentioned that deposit flows had stabilized over the past week. We also heard very similar comments from Bostic last Friday and from Kashkari on Sunday. There seems to be a little bit of optimism that the worst has passed.
Valerie, thanks so much. Valerie Teitel there with the very latest on Fed deposits. Coming up, Minneapolis Fed President Neil Kashkari says recent bank turmoil has increased the risk of a U.S. recession. So we'll discuss that next. And this is Bloomberg.
On the product may read made in the USA, but the sign on the CEO's door often says made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
What's unclear for us is how much of these banking stresses are leading to a widespread credit crunch, and then that credit crunch, you're right, just as you said, would then slow down the economy. This is something we are monitoring very, very closely.
Okay, that was, of course, Minneapolis Fed Chief Neil Kashkari speaking to CBS. Let's check in on these European markets then. The relief from the banking sector continues 12 minutes into the session. Across the banking sector, you're seeing gains of 2.7%. Across the benchmark, European stock 600 gains of a little over 1%. The CAC 40 over in France gaining 1.2%, gains of 0.8% here in the UK. Deutsche Bank, the standout, of course, in the banking sector after the sell-off on Friday, gaining a little over 5% in the session. Fran.
Now, joining us now to talk markets, possible risks of recession in the U.S. and otherwise, Caroline Simmons, UK Chief Investment Officer at UBS Global Wealth Management. Thank you, Caroline, for joining us. I mean, there's so much going on at the moment with the repricing of bonds. Of course, Kashkari is saying, like, look, they're monitoring a possible credit crunch. Do you feel uneasy about the next 6 months, or do you feel comforted by the fact that actually it's been a violent 2 weeks, but things have held up pretty much?
Yeah, well, I think it's a continuation of where we were headed, which is into this growth slowdown and the debate about whether we're heading into a recession or not. And obviously what's happened in the banking sector now has exacerbated the potential risks of the recession through potentially tighter credit conditions.
And has it, as by a connection, has it then also increased the chances of a credit crunch? Is that, how much of a risk is that now?
So I think it becomes more of an issue potentially in the US, in the smaller business area, because the regional banks do 50% of commercial loans in the US. So there is increasing risks of small business crunch in the US.
How do you make the case to stay invested given the fragile environment?
Yeah, that's interesting. So I think it's about where we invest. So at the moment for us, it's very much a fixed income opportunity. The yields are high enough now that you're getting some really good total returns on the fixed income space. But if growth deteriorates, then we would expect interest rates to cut, or at least risk assets to sell off, which would mean that your yield on bonds would fall even further. So some good protection on the bonds in both directions.
And the yields, the aggressive yield steepening that we've seen across the Treasury curve stateside, is there a risk that the bond market's going to be wrong-footed again? They're betting against Powell at this point. They're betting on rate cuts. They're betting on a pretty significant recession. Jay Powell says he does not see rate cuts until next year at the earliest.
Yeah, I mean, we have seen obviously the pricing in the markets are moving around a lot at the moment, and what we know is that we're getting near the peak of the cycle. So, if they're doing one more rate rise or they're not, we're almost there. And then it will be data dependent, as they've told us. We will have to see how much those credit conditions tighten to figure out which way they're going. But the interesting thing is that because the yields are already at the levels that they're at on bonds, even if rates do end up being higher than where people think they're going, the total return on the fixed income over the course of a year will still be positive. So it's still a better place to be versus some of the other assets.
Do you worry about liquidity?
Well, liquidity is a sentiment problem, which is obviously very hard to predict. In terms of the backstops being put in place by the central banks, they are very meaningful programs that are being made available. I think it's a question of we will just need to go through time before sentiment is fully restored, because certainly we know that solvency, profitability, and actually liquidity ratios are fine. It's just around the sentiment to do with that.
We focus, of course, on Deutsche Bank today, given what happened on Friday. Citigroup saying it was irrational, the sell-off, the European banking space rebounding to 2.4%, but of course it sold off pretty significantly in the last few weeks, double digits. Do you see opportunities in European banks?
I think for us, because the volatility is still going to be with us for a while, I mean, we're neutral officially on financials in Europe. I would say there's more of an opportunity in Asian banks, which have sold off a little bit, but not as much, but they're not as exposed to some of these sentiment concerns, and they equally have very good capital and solvency ratios.
How do you pick them, Caroline? I mean, again, for the moment, it's, we're trying to figure out the AT1s, but it does seem there's a bit more maybe exposure to some of the AT1s and the seniority of what happens in some of the Asian banks.
Mm-hmm. So we particularly like some of the Japanese ones and some of the Hong Kong banks.
Mm. I know you've got to focus on kind of diversifying away from the US in this environment. Is that a call on valuation, and where does it take you?
Yeah, so it is essentially a call on valuation because we're in this growth slowdown, so earnings are slowing across all regions, but in most regions the valuations are still okay, and in the US obviously they're still expensive. So our preferences are for emerging markets, particularly see upside on the Chinese market, obviously with the reopening momentum. We also like more defensive areas like consumer staples and utilities. Yeah, it's the first time in a long time that we've been, not having a preference for the US, and we've had this least preferred on the US space for a few months already now.
Okay, Caroline Simmons, thank you very much indeed. Stay with us. We'll get more from Caroline Simmons, UK CIO at UBS Global Wealth Management, just in the next few minutes. Let's get the Bloomberg Business Flash now with Sam Etienne. Sam.
Morning, Tom. Ammar al-Qaderi, the chairman of Saudi National Bank, has resigned. Credit Suisse shares slumped to a record low after al-Qaderi, the bank's biggest shareholder, told Bloomberg he would not support the Swiss lender any further. In the aftermath, UBS agreed to buy Credit Suisse in a historic government-brokered rescue aimed at stemming a loss of confidence. And the London Metal Exchange has resumed Asian hours trading of nickel contracts, marking a crucial step in efforts to repair the market. The metal opened for business at 1 a.m. UK time, more than a year after the LME suspended trading and cancelled billions of dollars of deals in response to a massive short squeeze. And Twitter is seeking to uncover the identity of whoever leaked parts of its proprietary source code. The code was posted on GitHub, the widely used code repository that's now owned by Microsoft. GitHub complied with Twitter's request to remove the data. Twitter now wants to identify whoever was responsible for uploading its code. And OneWeb has launched the final 36 satellites of its initial 616 satellite constellation. The CEO of the UK-based company says it now has enough craft in orbit to offer broadband to customers in the lower 48 US states from May, and global coverage by the end of this year. The company, a rival to Elon Musk's Starlink, says it plans to break even by 2025. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Samuel Etienne, and this is Bloomberg. Tom.
Hey, Jen, thanks so much. I'm going to pick it up here. Coming up, investors bracing for another week of turmoil as March nears its end. So we talk about dollar dynamics. We're back, of course, looking at the banks as well. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Our studios in New York and San Francisco. Our new hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, everyone. 22 minutes into the European trading day. Look at that. Hallelujah. For the moment, gains across the board, 1.1% higher. Nothing huge, but actually European stocks are gaining. Also, U.S. futures are up. And again, investors trying to weigh the risk of a recession, but also the impact on interest rates. It feels very different to the sell-off we had on Friday.
Yeah, a lot of that is tied to the news flow around the banking space, which is turning a little bit more positive. Again, we'll see if that holds across the European banking space. Let's check in on those stocks. Broadly, a sector gains of 2.5% in the session today. Of course, Deutsche Bank saw that sharp move lower, ending lower, down by a little over 8% on Friday. And of course, the credit default swaps jumped as well. Citi describing the moves around Deutsche Bank as irrational. There is some relief coming through. Regulators and the government in the US, we know on the state side picture, the picture in the US, putting together plans maybe for more lending support. And we know, of course, that First Citizens has taken over the assets of SVB, and First Republic remains in business, and maybe some more support coming from the government here. So these are the moves you're seeing across the banking space. Gains of close to 5% now for Deutsche Bank. So not completely making up for the losses on Friday, but getting somewhere there. Commerzbank gaining as well. Across Spain, Italy, and the UK, banks also up between 1% and 3%. Fran.
Now we're back with Caroline Simmons, UK Chief Investment Officer at UBS Global Wealth Management. Caroline, first of all, thank you for sticking around, but when you look at dollar dynamics, are you expecting dollar to weaken from here?
Yeah, we are. We've got 112 on euro dollar by the year end. I think as we go through, getting closer to the peak of interest rates, particularly in the US, we're going to see the interest rate differential start to fall between the US and the euro. And also, once the Fed or people's expectations of the Fed starting to cut rates comes into play, then the dollar tends to weaken. It's also quite interesting. We've done some analysis that shows that actually, in terms of a risk-off currency and wanting to own dollar sort of into recession, it actually tends to perform best in the stages of going into the slowdown. But once you're actually at the bottom of the growth, and whether that's a recession or not, then you're actually better with other safe haven currencies such as the yen or the Swiss franc rather than the dollar at that point.
Talk to us about commodities, because seeing Brent down about 8% in the last month. There's a rally today, gains of a little over 1%, but the data out of China is pretty soft, and then there's concerns obviously more broadly about a global recession in the US. Has the commodities trade been killed off?
Well, I think what's happened is obviously the growth picture has been called into question, which then calls into question risk assets such as oil. But then we also had a compounding of effects through derivative positioning from banks, essentially, who were placing financial trades for oil-exposed customers. That can easily wind back up again. And our view is that that oil will move higher over the course of the year because global demand for oil is continuing to rise. Yes, growth is slowing, but emerging market growth is still there, and the demand for oil is still very much there.
Caroline, is there worry, though, that something could go wrong in emerging markets because of just interest rates, right, from 1% to 5%? And I don't know whether the banking crisis is partly due because of that you can't raise so fast without anything breaking.
Yeah, I mean, it's obviously the aim of raising rates is obviously to slow the economy, and one way you can do that is through lending. So there are clearly effects. I think in terms of the emerging markets, they are more diversified in terms of their funding than in previous years. We are now expecting the dollar to weaken, which is actually helpful for emerging markets, and some of the acceleration in the growth, particularly out of Asia, is very opposite to the slowdown in growth we're seeing from domestic markets. So there should be some good momentum for the EM trade, and their earnings upside looks much better than in developed markets, which is seeing declines in earnings.
And just briefly on technology, the Nasdaq up 17% year to date. Do you lean into that rally around tech?
We don't yet. We're still tactically underweight tech. I think what's happened is we've seen the come down in yields, and therefore people have sort of used that as an excuse to buy the long duration tech names. But if you're worried about growth or recession, you'd be better off buying something like consumer staples, which are more resilient to growth slowdowns. Tech does still have product cycle issues, but also it isn't resilient to recession.
Caroline Simmons, excellent. Thank you very much for joining us in the studio this Monday morning. UK CIO at UBS Global Wealth Management. Coming up, German steelmaker Salzgitter reports a profit beat and raises its dividend. We're going to speak to the CEO next. This is Bloomberg.
climate change are on Bloomberg.
Think about Ukraine right now and Putin's threats to use nuclear weapons, and think about Kim Jong-un just firing all these missiles. And ask yourself, what's the percentage that we're going to have a nuclear war? I think it's in the low single digits. What are the odds that this planet is going to just rebel against what we're doing to it, and the capacity to have food production in Africa, the capacity for water where it is today? That's 100%, folks, not 1, 10, 15, 20, 50. It's 100% certain that these terrible things are going to happen if we don't do X, Y, and Z. So are we going to get serious or aren't we? We have to start to declare war on the climate crisis, coordinate as if we were in a war, get countries together to help with supply chains. This issue is existential. You know, there's this downside of where we are, but there's also this incredible upside filled with possibilities. The capital markets are already moving in this direction. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage, water storage, carbon capture, utilization. Something's going to break through, because that is what we human beings do.
Nobody covers climate change like Bloomberg, your global business authority.
This is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into European trading day, and here are your top stories. Saudi National Bank's chairman resigns after comments to Bloomberg this month on Credit Suisse pushed the lender's shares into a tailspin. Deutsche Bank shares pull higher, rebounding from Friday's sell-off. Banks lead gains in Europe shares. Plus, waves of protests in France cripple some critical services over the weekend, with more expected tomorrow, adding pressure on President Macron's push for reform. Tom, if you look at the markets, a sigh of relief. It's not the ugly Friday we had.
Yeah, a sigh of relief, risk on across these markets. You're seeing that playing out in commodities. Brent is higher. The Bloomberg Dollar Index is essentially flat. Yields higher, particularly at the front end of US Treasuries. And across the equity space, yes, the focus remains on the banking space. But as Francine was saying, there is some relief, at least for now, around banks, and that's the leading sector. The last time I checked, at least across the benchmark, you're seeing gains of a full 1% now across European stocks. There's a lot of potential volatility coming through this week, whether it's Fed speakers or indeed the PCE price indicator, which we know is favoured by Jay Powell and co. that comes in towards the end of the week. It may give a sense of the direction, the next steps of the Fed, as the bond markets increasingly bet on rate cuts and a recession. The DAX gaining 130 points. Here in the UK, the FTSE 100 up 55 points, gains of 0.7%. Let's switch it over then and see if the leaderboard is still pointing to banks at the top of the list. We're going to see and break down individual names then. The sector is gaining, obviously, on the back of that relief, some of it coming through, certainly, from regulators in the US and the news around Silicon Valley Bank being taken over by First Citizens, but also moves by the government there, potentially to lend up or push forward more lending. So here is the relief rally coming through. Deutsche Bank, following the losses of around just over 8% on Friday, making some progress in paring those heavier losses. 3.5% is the gain currently in the session. Commerzbank higher as well. UBS a little bit more muted, 0.4%, and some decent gains for Barclays, up 2% as well. We have another board showing what is happening across the rest of the banking sector. Again, gains of between 1 and 2%. So modest gains, modest upside. There is a bit of relief. Of course, the question is whether or not that holds. Now, let's have a look at how the sectors are playing out then. Banks at the top of the list, gaining 1.7%. Healthcare and Novartis is a big part of this mix, and we'll get more details on that story around a breast cancer drug and some optimism around the progress on that front. Autos and parts also up 1.3%. Every single sector this Monday morning in the green. Basic resources just range bound, despite the fact that Brent is coming in higher for the session. Francine.
Now, Deutsche Bank shares are up in early trade after the German lender was at the epicenter of another sell-off in financial shares heading into the weekend. Now, let's talk, of course, about German banks with our reporter, Stephen Ahrens in Frankfurt. Stephen, it was pretty shocking, actually, to see DB stock being hit so hard on Friday. What were exactly the underlying reasons for that?
Well, it seems like
It was nervousness, market nervousness, as you remember very well, probably. Just the weekend before, Credit Suisse had to be rescued because people were pulling money out of it, and that created a lot of tension across the banking industry in Europe, and add to that all the problems in regional banks in the U.S. There was really a bit of a trigger event on Friday that was enough to set off really nervousness about Deutsche Bank, and that just kept going and going and going, set off a bit of a self-fulfilling prophecy, and I think that was what behind the big sell-off on Friday.
What are we expecting this week then? More volatility across this space?
Well, I mean, there's already a bit more volatility, right? It's up, so it's, I guess, positive volatility, if you will, for the banks. But just a little event can change that. I think the nervousness has not subsided. Yes, SVB has been sold now by the FTC, which will give a bit of reassurance. But we're in the European market. People are still very much concerned whether banks can actually withstand the latest bout of stress. And I'm pretty sure there will be more volatility, yes.
Okay, Bloomberg's German banks reporter Stephen Aaron on this important banking space across the sector gains just of 1.4%, so pairing some of the heavier or more solid gains at the start of the session. Thank you for the insight there. Now, Germany's second largest steel maker, Salzgitter, has lifted its sales forecast for this year to 13 billion euros. It comes as the company pushes ahead with a project to transition to green steel powered by renewable energy. Let's bring in the CEO now, Gunnar Grobler. And sir, I want to, of course, get into the earnings picture and that important transition, but let me start with the linkages between the banking crisis and concerns about a credit crunch. Do you fear a credit crunch now across Europe?
Good morning from Frankfurt. No, I don't foresee a credit crunch coming through that banking sector volatility that we have seen last week. I think especially when we're looking at the transition in the steel sector and for Salzgitter especially, we're good on the financing side, so I don't expect any major turmoil for us, at least from that end.
Mr. Grobler, can you talk to us about how you're expecting the year to pan out? So usually if you're a steelmaker, you make a lot of the products that households use day in, day out. So you're almost an early indicator of a possible recession. Are things slowing down?
Well, actually, we're seeing a modestly positive start into the year 2023 on the wide range of products that we're offering, especially on the plate steel side. This is for infrastructure, for the renewable industry. We see a good pickup in the market. Even automotive has picked up recently. So all in all, I would say we're seeing a normalizing trend after a very, very good year 2022, but a robust and positive outlook also for 2023.
A normalizing trend. Just how challenging has it been to navigate that energy crisis and in the supply chain crunch across this, important industry and industrial steelmaker of which you are head?
Well, I think first of all, we shouldn't forget that steel is the starting point of any value chain that you could think of. So steel is an important factor in any industry, in any economy, and I think that is what we have seen the last year with a high demand on steel in the first half, which led to high prices. Ultimately, also the basis for the very good result that we showed in 2022, and now, so as said, we're seeing the normalizing year 23, but still quite some pickup in the market, and also energy prices coming down, which certainly helps the steel industry in Europe and us in Salzgitter as well.
So energy crisis, supply chain issues, the banking crisis, what do you worry about the most in the next 12 months?
Well, I think looking at us, we're in the middle of the transformation. When we have been very clear on our strategy to transform the steel industry from a CO2 heavy product to a CO2 free and low CO2 product. We see big support from governments. The German government, together with EU, have granted a support of €1 billion for our transformation first phase, and we see also pick up from our customers demanding green steel. So from that respect, I think we have all the fundamentals in place to really run that transformation through, and we're well beyond PowerPoint. Actually, we're in the making. We have trucks on site and really building that new way of making steel CO2 free, and hence I think we are off to a good future in 23 and beyond.
And you've raised your budget forecast for that transformation, just for the first stage, to between 2.2 and 2.4 billion euros. What is your level of confidence that you're going to have enough funding to push past that first stage to get this transformation to its conclusion? How confident are you that the funds will be coming through for that?
Well, first of all, we have now sort of seen the complete package of the first phase of the transformation, which is, as you said, in the level of 2.4 billion euros, and we're very confident that we're able to push through with that funds for phase one. And of course, we always looked at the entire transformation. We won't stop after phase one. We have a plan until 2023 to really push through with the entire transformation, including funding, and we're very confident that we're able to fund that entire transformation all the way through with own funds generated through the profits that we generated last year and we are to generate in the upcoming years, but also with the financial measures that we have at hand.
Mr. Grobler, do you see the Inflation Reduction Act in the U.S. as a real threat to green investment in Europe?
Well, I think what I like is the starting point of a discussion for the GSSA, where EU and the US are discussing how can we actually create a common framework for carbon-reduced steel between those two regions. And I think that's a good starting point, and I put a lot of hope in good political discussions to really get those two markets closer together and enable us to deliver green steel into the US and vice versa. So that is where I would see sort of the political development for the upcoming year rather than the Inflation Reduction Act.
Okay, I mean, there are the subsidies, of course, linked to the Inflation Reduction Act. Then there's a question about whether or not this really is a viable business opportunity to produce green steel in Germany, given the ongoing concerns about energy. You can go to other jurisdictions, produce their abundant renewable energy. What is the business case for doing it in Germany versus another part of the world where you can get access to that cheap renewable energy?
Well, renewable energy and cheap energy is one element of that equation. I think the other element is also the customer side. We're very close to customers. Customers know the quality that we are able to produce, and there's a close linkage to that. And with that industrial transformation and the energy transformation we're looking at in Europe, there will be a big need for green steel in that region. Hence, it makes perfect sense to produce that green steel close to where the customer is. Of course, we have to look at the energy prices, but also here I'm very confident that we also on the political side see some development towards sort of more reliable and sustainable prices on energy, both electricity and gas and hydrogen ultimately, also here for Europe.
Thank you so much, Gunnar Grobler, there, the Salzgitter Chief Executive Officer. Now, coming up, France rocked by protests over Emmanuel Macron's pension reform plans. We'll look at the economic and political impact, and of course, we wonder what's next. This is Bloomberg.
Plain vanilla, garden variety is totally delusional. I mean, it's totally delusional because we're not going to have only inflation. We're not going to have only stagflation. We'll have a stagflationary debt crisis, the worst of the 70s and the worst of the post-GFC period. That's what's going to happen.
I got to say, you're not helping with my anxiety levels right now.
I'm going to go. I'm moving my portfolio to cash. 1 second. I got to pause the
Well,
podcast.
cash is not enough because you wiped out by inflation. You have to go to assets, and I can discuss. They can hedge you against inflation.
Stagflation already seems like the nightmare scenario for central banks if you have high prices and lower growth. But if you tack onto that a debt crisis plus stagflation, that just seems like incredibly difficult for any central bank to navigate.
covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of 3 very bad decisions, but it could prove to be a mistake.
She opposed Powell's renomination. She called him a dangerous man in 2021. And now she is really pointing the blame at the Fed.
We're expecting that she'd be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
From this to this. Clashes between protesters and the police have become a regular scene of Parisian life, with beans burning and tear gas reminding of the student revolution of May 1968. Even in the southwest city of Bordeaux, the gate of City Hall was set on fire. Meanwhile, the garbage has accumulated in the French capital. It's a very different image from the dynamic, modern France promoted by Emmanuel Macron when he was first elected in 2017. The 45-year-old former banker wants to raise the minimum retirement age from 62 to 64. Most French are opposed to this, giving Macron 2 major problems. Problem number 1, critics say he's touching the very heart of the French way of life and social model. Problem number 2, his method. Lacking a parliamentary majority, the government used a decree to force the reform through without a vote. That has angered millions of French people. Macron's popularity has fallen to the lowest in 4 years. Protests by the so-called Yellow Vests against fuel taxes blighted his first term. Now the deep opposition to his pension overhaul could threaten the remaining 4 years of his reform agenda and leave the door open for the National Rally candidate Marine Le Pen.
Bloomberg's Caroline Conan there on the protests across France. Now, we of course look at the implication for investment, and I think we heard one of the strongest statements yet from the MEDEF. This is the business lobby, basically saying, look, if this lasts for too much longer, it could discourage investment.
There's the tension. Macron has been trying to push through reforms to make France a more investable and more business-friendly jurisdiction, nation, and yet the protests and the burning of the streets in Paris and the trash that's being collected up, all of this, of course, risking putting off that very investment. And the last piece in that package by Caroline really points to the longer-term potential geopolitical threat, which is the far right. And we've seen in polling they have gained on the back of this.
Yeah, I mean, incredible scenes, actually. I mean, we both know Paris really well. Incredible scenes to see it burning like that with rubbish everywhere. And then the embarrassment of Monsieur Macron having to call off the state visit of the king. That was, that's something not to be forgotten.
Yeah, absolutely. Right, let's get to the Bloomberg First Word News now with Sam Etienne. Sam.
Morning. Thousands of protesters have been on the streets of Israel overnight, including around Benjamin Netanyahu's home. This after the Prime Minister fired his defense chief over a dramatic speech criticizing a plan to reduce the power of the Supreme Court. Netanyahu's proposal has sharply divided Israeli society and faced criticism from international allies. China's economic recovery was mixed in March. Business confidence and the housing market improved. But according to Bloomberg's latest index of 8 early indicators, falling car sales and weak global demand are proving a drag on the economy. And the chairman for the UK's Office for Budget Responsibility says leaving the EU had an impact on the British economy similar to the coronavirus pandemic. Richard Hughes told the BBC that Brexit will cut long-run output by 4%. He says growth has also been held back by declining productivity, a shrinking workforce, and stagnant investment. And Australia's centre-left Labour Party has taken power in the most populous state of New South Wales. It ends 12 years of Liberal national rule and has sealed a left-wing sweep across most of the country. Broadcaster ABC reports that Labour leader Chris Minns is the new Premier of the state, which includes Sydney. His party has taken at least 47 seats, giving it a majority in the state's parliament. That's global news powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Samuel Etienne, and this is Bloomberg.
Sam, thank you so much, Sam Etienne. Here in London, coming up, President Putin says Russia is preparing to station tactical nuclear weapons in Belarus. We'll bring you the latest on that story. Stay with us. This is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. We are 51 minutes into the European trading day. We're still holding on to gains, but actually not gaining as much as 15 minutes ago. European stocks gaining some 0.6%, and then watch out for the banks. Joining us for more now on France. We're just talking about France and looking at some of the pretty incredible scenes across Paris is our economy reporter. He's William Horobin. Will, first of all, the protests are quite incredible. Was this a political mistake of Macron to push this through?
It certainly feels like he might be reaching the limits of what he can get through, having bypassed Parliament somewhat using a special constitutional provision, and it's really since then that things have become increasingly violent.
And what has the economic impact been so far on these quite remarkable images, these strikes, not just in Paris, but across the country, Will?
Well, economic impact of strikes and protests in France has actually been, in the past, has been less than you might have thought. Generally, it's thought that a sustained period of protests can take about 0.1 or 0.2% off 1 quarter of growth. But it's more sort of longer-term economic issues that are at stake, because if Macron is slowed down in his economic reforms, then that would obviously have an impact on France's longer-term growth potential.
Okay, Bloomberg's William Horriban on the ground for us in Paris, and the latest regarding these protests and strikes and the economic impact. Thank you, we appreciate it. Now, President Putin says Russia is preparing to station tactical nuclear weapons in neighbouring Belarus. Ukraine has demanded an extraordinary meeting of the UN Security Council in its first official response to Putin's announcement. Joining us for more is Bloomberg's Bill Ferries in Singapore. Bill, what do we know then about the details on this move, and why is Putin doing this now?
Well, since just after the start of the war, President Putin has often rattled his nuclear saber. This latest action comes after a tough winter in which Russia is believed to have lost a lot of troops and gained very little ground. His military is looking for an extra 400,000 troops now to bolster itself. This, I think, in some ways allows him to change the narrative. He said that there will be planes and missiles based in Belarus that will be capable of carrying strategic nuclear weapons. The EU has already responded and called this a dangerous escalation of the conflict. The U.S. has so far been a little bit more muted. It's said that it's not changing its nuclear posture, that it doesn't see a rising risk of nuclear conflict, but it certainly puts a lot of countries, a lot of people on edge, coming as it does more than a year into this conflict.
Bill, what has been the reaction of the U.S. and allies?
Well, it's been a bit of a divided approach. The EU has heavily criticized this, and as you mentioned, the government in Ukraine has called for an emergency session of the UN Security Council. That emergency session, of course, gives Russia a chance to veto any kind of resolution, so there's unlikely to be a big formal resolution of complaint. The U.S. will support any kind of resolution criticizing Russia, of course, but it has said it still doesn't see the risk of a nuclear weapons being used in the war at this point.
Okay, Bloomberg's Bill Ferries, thank you very much indeed on that important geopolitical story for us. Let's get back to the banking space. Across the benchmark here in Europe, banking stocks gaining just 0.8%, so pairing some of the heavier upside that we saw at the front of the session. Deutsche Bank, of course, remains in focus for us today, given the more than 8% sell-off on Friday, something the Citigroup called irrational. Deutsche Bank currently up a little over 2%. You can see some gains for Commerzbank as well. UBS has turned lower. Barclays gaining 1.3%. On the US, of course, we've had some news flow that seems to be a little bit more optimistic around the prospects for First Republic, also Citizens taking over the assets of Silicon Valley Bank. We'll check in now on Deutsche Bank specifically. Again, the CDS was something that caused concern on Friday, but currently you're seeing some gains, just 2%. At the start of the session, the upside was looking more like 6%, and that's been paired, of course. And we'll see to what extent this is going to be sustained, and continue to watch out for any more comments from regulators here in Europe as well. So that's the picture across the banking space. More broadly, across the European benchmark, you're seeing gains of 0.7% this Monday morning, led by now healthcare gaining 1.5%. Autos also up above 1%, but now three sectors in the red, including basic resources, down 0.7%. Francine.
Yeah, I don't want to be a downer on anything, but actually we could see another bumpy week. So first of all, watch out for the banks, as Tom was saying. And then on top of that, we have many Federal Reserve officials speaking. A key measure of U.S. inflation is due, and then renewed geopolitical tensions with Russia to station tactical nuclear weapons in Belarus. So again, if you listen to Neil Kashkari, what he said over the weekend, that a bank turmoil had increased the risk of a U.S. recession. We look at credit crunch. We kind of look at, the mood overall. What happens next?
Certainly the bond markets continue to bet on rate cuts towards the end of this year, even as Jay Powell insists they are not coming. We'll look for the PCE price indicator later this week for a further guide on the Fed. Stay with us. Surveillance Early Edition is up next. This is Bloomberg.
so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The Saudi National Bank chairman resigns after comments to Bloomberg this month on Credit Suisse pushed the lender's shares into a tailspin. Deutsche Bank shares pull higher, rebounding from Friday's sell-off. Banks lead gains across European shares. Plus, mass protests in Israel. Prime Minister Benjamin Netanyahu is expected to speak in the Israeli parliament any moment now after his controversial judicial reforms sparked more demonstrations. Now, let's take a look at the markets. Quite a lot going on, especially after we heard from Neil Kashkari over the weekend. Now, European stocks, you can see, holding on to gains of 0.6% higher. Really, a lot of the focus is on banks. S&P futures pretty much flat now. We are not as high as we were just about 20 minutes ago. Again, you could see a pretty bumpy week, actually. Later in the week, we follow developments in the banking sector very, very closely. Also, we have multiple Federal Reserve officials speaking. A key measure of U.S. inflation is due. And then, of course, geopolitical tensions with Russia stationing some tactical nuclear weapons in Belarus. The U.S. two-year yield 3.62. For the moment, we're seeing gains across the board. The DAX 0.5% higher with Deutsche Bank stabilizing. We're also getting some IFO figures. So I think we're getting that now. If we don't have them now, we'll get them to you very, very shortly. But this will be a good indication of the stability of the financial sector, of course, in Germany. So let's see if we have that IFO Business Confidence Index 93.3. It's actually stronger than expected. We were expecting a 91 figure, and it's coming in at 93.3. Now, the chairman of the Saudi National Bank, Ammar al-Qudari, has resigned. It follows his comments on Credit Suisse earlier this month, which triggered the Swiss lender's stocks to plunge to its lowest level on record. Now, joining us now is Bloomberg's Youssef Gama Eldin, who conducted that interview. Youssef, was he always going to go after that interview?
I mean, yeah, it was almost inevitable in many ways because the Saudis made a big bet on Credit Suisse in late October, early November. They bought a 9.9% stake, and he in many ways personified that big bet, and he has defended it vigorously to the very end. Here's what he had to say, and here's what triggered all of this.
Absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
so refusing to inject any additional liquidity. He tried to walk that statement back in other networks later on, but bear in mind that Saudi National Bank investors are responding to this change in leadership positively. The stock is up a little bit over 1.5%. The role of the Public Investment Fund, which holds about a 37% stake in Saudi National Bank, should not be undermined. And as much as this was a valuation bet on Credit Suisse, it was meant to create synergies. It was meant to put Saudi National Bank on the global map. That's been set back now, and clearly some executive reshuffle is meant to reset credibility and maybe some of those aspirations. Fran.
Youssef, thank you so much. Youssef Gama Eldin there with the very latest on Mr. Al-Qudari. Now, Credit Suisse faces a threat of a possible probe and disciplinary action over how top managers ran the bank in the lead up to its collapse and takeover by UBS. That's according to Switzerland's banking regulator FINMA, reported by Swiss paper NZZ am Sonntag. Now, let's bring in Bloomberg's JP Barnett. JP, what does this mean for Credit Suisse?
Well, I'm not so sure if it means a lot now that the bank is part of UBS and in a merger, but still, while you're pulling off this mega merger in terms of operations that they have to align, you don't want to have like any side stories of regulatory investigations into that issue. What is also interesting to me is like it showed us how skeptical the regulator was of the management for a couple of months now, actually, and that explains a little bit why there was such a haste in merging Credit Suisse with UBS, because the story sends the feel over that the regulator was pretty unhappy with how the bank has been run for quite a while now.
So, JP, what's happening at Deutsche Bank?
Well, I want to be cautious with Deutsche Bank. We see a rebound today. The move on Friday was brutal, but a little bit irrational or extreme, maybe, as some analysts are pointing out. What we're seeing overall in the European banking sector right now is a repositioning of earnings expectations. And of course, some banks that have a higher exposure to corporate lending, and then especially Deutsche Bank with a high exposure to Germany as the biggest economy in Europe, are getting hit a little bit harder. But I think, like, so far, we have not seen any evidence of instability or liquidity concerns within the European banking system. But what the market is doing, and he is right so to do so, is repricing its earnings expectations for banks going forward.
So, JP, stateside, First Citizens Bank is buying SVB this morning. What do we know there?
Well, that's a good sign here. I'm not sure if it's like the end of the full story for the U.S. banking system, but at least we have like one pending problem solved here. And overall, I think we can take the conclusion that everything was dealt with rather quickly, which is a good thing. The regulator did not hesitate or wait too long for any systemic contagion spread too far. Is it totally over? We will see how deposits will keep on developing forward in the U.S., and that will certainly remain in focus of investors for the coming days and weeks.
Great, JP, thank you so much. Jan Patrick Barnett there with the very latest on the bank. So Silicon Valley Bank has been sold to First Citizens Bank with all its deposits and loans taken over. That's after the San Francisco-based lender was seized by regulators after a run on the bank. Now, that impacted deposits for small banks across the United States. Joining us now is Bloomberg's Valerie Teitel with the very latest. So, Valerie, good morning. What's the latest from the Fed's deposit data?
Yes, the Fed deposit data we got after the close on Friday didn't paint a pretty picture, Francine. It showed that small U.S. banks lost 2% of their overall deposit base. It was the biggest outflow these banks have suffered on record. But there has been some more positive developments recently that show that this might be the worst, and perhaps the worst is past us. One of that being that the emergency lending that the Fed does, the bulk of it still stayed in the New York and San Francisco Fed districts, implying that it hasn't spread to other banks in other regions, smaller Midwest banks, for example. And Fed members continue to reiterate that they see deposit outflows as stabilizing. We heard this directly from Powell in his press conference, from Fed Bostic on Friday, and from Neil Kashkari over the weekend, painting maybe a more positive picture that the worst is behind us when it comes to these deposit outflows.
Valerie, thank you so much. Valerie Teitel there with the very latest on deposits. Now, coming up, recession fears rise. The Fed's Neil Kashkari says the recent banking turmoil brings the U.S. closer to a downturn. We have plenty more on that next, and this is Bloomberg.
the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
What's unclear for us is how much of these banking stresses are leading to a widespread credit crunch, and then that credit crunch, you're right, just as you said, would then slow down the economy. This is something we are monitoring very, very closely.
Well, that was Minneapolis Fed President Neil Kashkari. Let's stay on the recession risk story. Joining us now is Daniel McCormack, Head of Research at Macquarie Group, and Bloomberg's Christina Kino. So thank you both for joining us. Daniel, how worried are you that there's an impending recession that actually, stems from a pretty big credit crunch in the U.S.?
Yeah, I think, and thanks for having me, Francine. The banks were already tightening credit standards before this banking crisis hit. That's true in the US, and it's also true in Europe. And I think it's definitely true that one certain consequence of this little banking crisis that we're going through right now is that banks are going to tighten credit conditions further. And that's going to exacerbate what is already fairly weak economies and fairly sluggish momentum. So I think it will accelerate what is already a sort of slow-moving downturn.
So where do you see the best opportunities, Daniel?
Well, within listed equities, I mean, we would be quite defensive at the moment, given that I think we are on the cusp of a slowdown, both in Europe and in the US. So I'd be looking for companies that are defensive, that have low leverage, both operating and financial, that have the ability to control their margins, that have exposure to genuine structural growth drivers rather than cyclical growth. These would be the types of exposures that we would be looking for.
Christine, when you look at dollar dynamics and the fact that actually we could see a weaker dollar from here, how does that change everything?
Well, Francine, I think it really is reflective of how investors are thinking about this, right? It is really a question of, do they want to be in U.S. dollar assets or not, given the current environment? And I think the real driver of that is really what's happening in the bond market and the rate market dynamics that we're seeing at the moment. Because at the moment, we are seeing those rate cut expectations getting built into that curve, even as soon as later this year. The Fed was very clear that that's not their base case, but investors just aren't listening at the moment. And that's really not something that makes the dollar appealing at this point in time.
Yeah, and so Daniel, what does it mean? I mean, what's the case actually for staying fully invested given liquidity concerns and given the panic one we saw in the banks?
Well, I think it's just how you position at the moment. I mean, I think, as I said, you should be positioned defensively within the listed equity space. I mean, I think bonds look pretty good at the moment, particularly at the short end of the curve. I think expectations around central bank activity are really peaking out now. So, we would have a defensive positioning overall.
In terms of what we're expecting, of course, it's inflation in the U.S. I mean, do we ditch the dot plot and just assume that central banks are done, Christine?
Well, Francine, I think it's far from conclusive at this point in time because it's difficult to discount what policymakers have really been telling us time and time again. And we have seen their ability to kind of pivot back and forth depending on what the data is telling them. I mean, we saw that over the last couple of weeks where clearly inflation worries take precedence over banking sector worries for the Fed, the Bank of England, and the ECB. And while they do very clearly have this kind of peripheral vision, whether the banking crisis kind of spreads more widely, I think it is still very clear that inflation is very much the priority. And so expect more of that tension to moving forward, that banking versus price stability versus financial stability, very much still the question over the next couple of policy meetings.
Daniel, what's your take? I mean, are they done? Is the Fed done? Could we really see the market is pricing in cuts? Is that a real possibility?
Yeah, I think there's a really interesting divergence between what the Fed is saying and what the market is saying at the moment. Those divergences open up periodically. I think the Fed is done, and I think the ECB and the Bank of England are done as well for now. But I think one of the really interesting things that's going on at the moment is you're seeing a real divergence in the inflation performance between the US on the one hand and Europe and the UK on the other. We got the UK inflation figures out last week. Much more sticky than what was expected, and much more sticky than what we've seen in the US. And overall, I think this is not a huge surprise, because if you think about the UK and European economies, they just have much more mechanisms to keep inflation stickier for longer. So there's much more wage indexation, unions have more power, there's more regulation which limits the scopes for markets to do their thing, reallocate resources and bring prices down. So I think this is something that all three of those central banks are going to be battling with right now, and it's really going to be tricky for the ECB and the Bank of England going forward.
But so, Daniel, give me a sense, where are we in the cycle? And if we've never seen this before, is it a 70% chance of a policy mistake?
So we're right at the point in the cycle where central banks pause and markets start to push them towards cutting. And the question, I think, from here is, what happens, obviously, with the banking sector, what happens with inflation, and what happens with growth. But we are, I think, in a structurally different kind of environment than what we've been in for 30 years. And what we may see, where people may be surprised and markets may be surprised, is inflation doesn't come down as rapidly as it normally would when growth falls away. That makes policy decisions very, very tricky. It makes investing very, very tricky. And I think, you're really going to see that play out, particularly, as I said, with the Bank of England and ECB, because I think inflation in both of those countries/regions is likely to be much more sticky than it is in the US.
And Christina, then they have to manage liquidity.
Absolutely, Francine. And again, this really makes for a tough balancing act for central banks, because it brings us back again to that question of, do they prioritize financial stability in the form of providing liquidity to markets and reassuring investors that this is not the banking crisis of 2008, or do they keep at inflation? Because again, as Daniel pointed out, in the UK especially, that's still very much a problem, despite the fact that we've seen a lot of rate hikes already from the Bank of England. But yeah, I think it really is quite the optionality problem at the moment. We've seen some calls for them to perhaps maybe lay off the forward guidance and emphasize their data dependence and development dependence instead.
Thank you both for joining us. Daniel McCormack, head of research at Macquarie Bank, stays with us, and Bloomberg's Christina Kino. Now, coming up, nickel trading on the London Metal Exchange resumed Asian hours trading today. We'll bring you the very latest on how the expanded trading hours are going. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
From the world of politics to the world of business, Balance of Power is now live from Bloomberg's Washington headquarters at a new time. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players. Balance of Power, now weekdays at 5 p.m. Eastern, only on Bloomberg, your global business authority. The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the London Metal Exchange has resumed Asian hours trading of nickel contracts, marking a crucial step in efforts to repair the market. The metal opened for business at 1 a.m. UK time, more than a year after the LME suspended trading and canceled billions of dollars of deals in response to a massive short squeeze. Well, joining us now for more on this is our London Metals reporter, Mark Burton. Mark, so why has this taken so long, and how's trading so far?
It has taken a long time for them to take this step, which was very much intended to be a temporary measure because of ongoing concerns about the risk of very sharp price moves during Asian trading hours when trading in all metals is not particularly liquid. They were planning to reopen it a week ago, but delayed that because, as they stated, there were concerns that there might be sharp price moves in the wake of this discovery that some of the metal that was in their warehousing system was actually bags of rock rather than bags of nickel.
I know, that story's incredible.
I know,
couldn't get enough of that story.
It never ends for
How
the
does that
LME,
even happen?
I know.
So when are we expecting trading volume to go back to normal?
Well, it's the key question. There are lots of doubts about whether it can really return to the kind of liquid market that it was prior to this crisis. There's still a lot of investors out there who are angry at the LME because of these rather unprecedented steps that they took to try to rein in the short squeeze last time. The progress so far would suggest that it's going to take some time, if at all. Trading was incredibly illiquid this morning, and it's really only picked up now that Europe has opened.
Mark, thank you so much. Mark Burton there, Bloomberg's metals reporter, joining us on the LME. Now, still with us, Daniel McCormack, head of research at Macquarie Bank. When you look, Daniel, at the UK economy, and we touched a little bit about the Bank of England, I'm looking forward to a lecture, actually, from Andrew Bailey a little bit later on, which I'll attend. I mean, does he have a harder job almost than anyone? Because inflation is not even sticky. It just keeps on rising when economists are expecting it to fall.
He has a very difficult job, Francine. I really wouldn't want to be in his shoes at all. I mean, as you rightly say, inflation is still in the double digits. It went up last week, despite the fact that it's been coming down pretty much everywhere for 6 months or so now. And at the same time, he has an economy which is crawling, right? The UK has basically been in recession since the middle of last year. So despite no growth, inflation is not coming down, proving very sticky at high levels. And this just makes the decision for the Bank of England, very, very challenging, because you cannot afford to have inflation expectations get embedded into price setting and wage behaviour. But on the other hand, of course, he doesn't want to over-tighten. He doesn't want to tighten monetary policy into what is perhaps, a mini banking crisis or certainly a tightening in credit conditions from the banks.
Yeah, so on the banking crisis, like what is the underlying reason that we had? I know it's a loss of confidence. There was, I don't know whether it's idiosyncratic to some of the names that we saw go under, or whether you think this could spread elsewhere in the Eurozone, but also in the UK.
I think it's a very uncertain environment. What I would say, Francine, is that I think for the banks that have experienced trouble so far, there seem to be some bank-specific or idiosyncratic factors that have influenced that. That is clear. Now, whether it spreads more broadly than that is very difficult to say. But one of the things I'm certainly watching for is asset write-downs. I think there are a number of spaces out there in the economy that are vulnerable. So particularly commercial property, the office space is challenged at the moment. There could be some private equity companies that experience difficulties over the next 6, 12, 18 months. And so banks with concentrated exposure to that could see some write-downs and potentially could see some challenges. Now, that said, I would say the global banking system is in much better shape than it was pre-GFC. And that is particularly true for the European banks, which from a capital and liquidity perspective are in much better shape than their US counterparts, and of course much better shape than they were pre-GFC or at the time of the sovereign crisis.
So, Daniel, I don't know whether after the kind of uncertainties about inflation and Brexit, the UK could be a bigger investment opportunity than the rest of Europe.
Well, I mean, the UK still has some work to do, I would say, to turn investor sentiment around. I mean, we've seen a number of companies out there pause on their investment plans for the UK, but things slowly seem to be getting sorted out from a Brexit point of view. I mean, I think the real challenge is this one we mentioned earlier, this macroeconomic challenge, whereby the Bank of England really has to thread this line between getting inflation under control, which is absolutely crucial for medium-term growth, but not over-tightening right now. Now, if it can get that right, the UK will return to growth. It's a dynamic, open economy, but they've got to get that right.
Daniel, thank you so much, as always, for joining us. Daniel McCormack, Head of Research at Macquarie Group. Coming up, banks still in focus this morning, both here in Europe and stateside. We'll check the markets and discuss the fallout from this month's turmoil with Jackie Bowie from Chatham Financial. That's coming up next, and this is Bloomberg.
recession, plain vanilla, garden variety, is totally delusional. I mean, it's totally delusional because we're not going to have only inflation. We're not going to have only stagflation. We'll have a stagflationary debt crisis, the worst of the 70s and the worst of the post-GFC period. That's what's going to happen.
I got to say, you're not helping with my anxiety levels right now.
I'm going to go. I'm moving my portfolio to cash. 1 second. I got to pause the
Well,
podcast.
cash is not enough because it wipes out by inflation. You have to go to assets, and I can discuss they can hedge against inflation.
Stagflation already seems like the nightmare scenario for central banks if you have high prices and lower growth. But if you tack onto that a debt crisis plus stagflation, that just seems like incredibly difficult for any central bank to navigate.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The Saudi National Bank chairman resigns after comments to Bloomberg this month on Credit Suisse pushed the lender's shares into a tailspin. Deutsche Bank shares pull higher, rebounding from Friday's sell-off. Banks lead gains across European shares. Plus, mass protests in Israel. Prime Minister Benjamin Netanyahu expected to speak in the Israeli parliament any moment now after his controversial judicial reforms sparked more demonstrations. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first. After the huge pressure we saw on European stocks on Friday, let's check in on European banks and what they're doing in today's trading session. Now, we have a board up for you, and this is a picture across the board. So Deutsche Bank gaining 4%, not quite recouping some of the losses that they had on Friday, but still an upside. BNP Paribas gaining 1.5%. Now, traders in for another bumpy week. Developments in the banking sector, of course, very closely watched. We'll also get onto U.S. regional banks shortly. On top of that, we have a lot of Federal Reserve officials speaking. Key measure of use inflation due. There are also renewed geopolitical tensions with Russia to station tactical nuclear weapons in Belarus. Now, this is a picture across the board for some of the U.S. regional banks that are just starting to open pre-market. The concern there is that as we saw liquidity dry up or credit crunch, then this could actually bring the U.S. recession closer. You can see First Republic gaining 18% pre-market, PacWest Bancorp also gaining 8%. Now, joining us to discuss all of this, Jackie Bowie, Managing Director at Chatham Financial. Jackie, great to have you on the program. Thank you so much for coming in. When you look at the banks, have we found a floor? Is there a bit more stabilization, or could anything happen?
Yeah, I think it looks like a little bit of a short-term relief rally. I mean, the sell-off on Friday was pretty bad. I would say that there's still a lot of fear and lack of confidence across the sector, so still a bumpy road ahead.
But why? So if you look at exactly what happened on Friday, and I know it was fear, it was, I guess, contagion. There was nothing really that one single thing that sparked it off. And there's, a lot of jokes around, well, would you put your money in that bank? But this was a safe bank. So again, what can you intimate from what happened on Friday to what could happen to other European banks?
Yeah, I mean, generally people are very focused on counterparty credit risk, and you could have said the same thing about Credit Suisse 2 days before the merger happens with UBS. Deutsche Bank's had its troubles, a few years ago, and if we look at the price of insuring against a default in Deutsche Bank, so those CDS spreads, that's what the market looks at to give an indication as to what other banks might be in trouble.
So could the market seize up again? I mean, fear, the problem with fear is that, once you have fear, it's very difficult to get hold of it.
It's very difficult for it to disappear, other than central banks globally have made a very concerted and joint effort to make decisions together around providing liquidity to banks in order to try and stave off those fears that there is a bigger banking crisis happening.
So, Jackie, do you worry about a credit crunch?
Yeah, and I think that is already underway. Even if we have no more banking failures, global interest rates rising, one major lender now removed from the market, and banks are reining in credit. So all of those factors together means we're moving into a credit crunch.
Credit crunch, what, in the UK, or I mean?
I would say in the US. I would say in the US and across Europe.
So can we avoid a recession in the US?
Yeah, I think a month ago we probably would have said yes. Same in the UK. The economic data was showing signs of slight positivity. I think with the situation in the financial markets, I think that is now a bigger question.
Yeah, and of course it points to the fact that central banks now have to make the decision: do they go for financial stability, or do they take inflation, to where it needs to be? What's the lesser of two evils?
Well, if we look at the decisions made by the Fed last week and the Bank of England, what they told us is that inflation remains their focus. But behind the scenes, as I say, putting in place huge amounts of extra liquidity to support the banking sector.
But does that mean that actually, and we heard, we saw a wobble last week when Janet Yellen was short of guaranteeing all deposits. Are we going to see just much more credit lines and regulators step in with financing, credit, and central banks supporting all the banks?
Yeah, and that's what they've done already. I mean, the swap lines coming from the Fed are now on a daily basis, the same as we had during the financial crisis. The Fed looking to provide liquidity based on collateral that's treasury yields at par, so not applying a haircut or a discount to that. I mean, that provides banks with a huge liquidity line, so they shouldn't have to draw in credit as much as they might have done before.
And then investors worry about moral hazard.
Yeah, I mean, that's a bigger behavioural point, and I think that really came out of the US support for SVB, where all deposits were guaranteed. It feels like European regulators don't want to go that far for that reason.
All right, thank you so much for joining us, Jackie Bowie, there, Managing Director at Chatham Financial. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Israel's Prime Minister Benjamin Netanyahu is reported to be considering a delay to his Supreme Court overhaul plan after a night of demonstrations. Local media say key ministers and aides have been urging a pause in the controversial policy. This after the Prime Minister fired his defense chief over a dramatic speech criticizing the plans. Now, Ammar al-Qaderi, the chairman of Saudi National Bank, has resigned. Credit Suisse shares slumped to a record low after al-Qaderi told Bloomberg he would not support the Swiss lender any further. The Saudi National Bank was the biggest shareholder in Credit Suisse. In the aftermath, UBS agreed to buy its Swiss rival in a historic government-brokered rescue aimed at stemming a loss of confidence. Now, Ukraine is calling for an extraordinary meeting of the UN Security Council to counter what it calls a provocative plan by Russia to station nuclear weapons in Belarus. Russian President Vladimir Putin has defended the move, saying the US has long kept nuclear weapons in the territory of its European allies. The chairman of the UK's Office for Budget Responsibility says leaving the European Union had an impact on the British economy similar to the coronavirus pandemic. Richard Hughes told the BBC that Brexit will cut long-run output by 4%. He says growth has also been held back by declining productivity, a shrinking workforce, and also stagnant investment. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, the latest polling in France shows that President Emmanuel Macron has lost voters to the far right over pension reform. Protests have rocked the country, with Le Pen's national rally gaining 5 points in one poll. Bloomberg's Caroline Conan has the latest from Paris.
From this to this. Clashes between protesters and the police have become a regular scene of Parisian life, with beans burning and tear gas reminding of the student revolution of May 1968. Even in the southwest city of Bordeaux, the gate of City Hall was set on fire. Meanwhile, the garbage has accumulated in the French capital. It's a very different image from the dynamic, modern France promoted by Emmanuel Macron when he was first elected in 2017. The 45-year-old former banker wants to raise the minimum retirement age from 62 to 64. Most French are opposed to this, giving Macron two major problems. Problem number one, critics say he's touching the very heart of the French way of life and social model. Problem number two, his method. Lacking a parliamentary majority, the government used a decree to force the reform through without a vote. That has angered millions of French people. Macron's popularity has fallen to the lowest in 4 years. Protests by the so-called Yellow Vests against fuel taxes blighted his first term. Now the deep opposition to his pension overhaul could threaten the remaining 4 years of his reform agenda and leave the door open for the National Rally candidate Marine Le Pen.
Bloomberg's Caroline Conan in Paris there. Coming up, Trump in Texas. The former president ramps up his attacks on federal officials investigating him while appearing at a campaign rally. More on that story next. This is Bloomberg. So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Our studios in New York and San Francisco. Our new hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Donald Trump has railed against the investigations that he faces while appearing at a campaign rally in Texas on Saturday. A New York grand jury is considering charges against the former president in relation to hush money payments he made to a porn star before his 2016 election. Now, joining us with the very latest on U.S. politics, Morris Reed, partner at Actum. He was also an advisor in the Clinton administration. Morris, as always, thank you so much for making us smarter on U.S. politics. So first of all, will Trump run?
Absolutely, he'll run. There's no reason for him not to run. Even if he's indicted, he can still run for president.
Really?
Absolutely.
What would make him not run? Or what needs to happen for him not to be able to run?
Nothing. Donald Trump will run for president. The question is, will he get through the primary? If there are 4 or 5 people in the primary, I think he gets through, which makes the Democrats happy. If it's Democrats or any Democrat versus Donald Trump, is a Democrat, lean Democrat for sure.
Okay, so who's running? We have Nikki Haley. We have DeSantis. We have Trump. Anyone else that could actually get it?
I think that you might have Pompeo, Pence may also run. I think there'll end up being 5 or 6 Republicans to run.
Who do the Democrats want to try and beat? Who's the easiest win?
The easiest for a Democrat is Trump. I think that anyone running against Trump is lean Democrat. Anyone non-Trump running against the Democrats is probably a toss-up at this point.
Who's going to be the Democratic candidate?
Right now, it's going to be Joe Biden, but you never know. I also like the governor of California's odds. I like the governor of North Carolina, for example. People don't talk about him enough. I like him a lot.
The governor of California is not too left-wing?
I think he is. He's probably too left.
Yeah.
But when you are a governor of a major state, you have the ability to galvanize voters and raise money. You can't really count him out if there's going to be an open primary.
Morris, and I know we're a couple of years away, but the economy's going south, right? Inflation is also partly because of the big packages that Washington pushed through under President Biden. Does that work against him?
it works for him in some cases, works against him in others. For example, I don't believe that we have a banking crisis in America. I think we have a regional banking crisis. There's an international banking crisis, but the Wall Street banks seem to be solid. I think that the president wants to make sure that there's not a lot of unemployment right now. So the stimulus package, he needs to get the money to the street. The only way to really push back on this is that when people are shovel ready and people can get to work. So he needs to make sure people are working, because as inflation goes, there will be a lot more layoffs.
But a banking crisis, even if it's contained, plays into the Republicans' hands, even if it doesn't impact the big
Not necessarily, because if you look at what the Democrats are saying, they're saying they want more capital requirements. Republicans saying they want less capital. So if you're a Democrat, you can really play this. You're saying we want safety and soundness, where the Republicans want to be laissez-faire and give the bankers whatever they want. So it's how you play it ultimately.
But inflation's a headache, right?
Inflation's a headache for everyone.
Any president going into a cycle, especially when you have a Fed that probably has to crush the economy to get inflation under control.
Yeah, it's interesting that, this is where you really see separation of powers in America, where the Fed will have to do what the Fed has to do, but the president certainly doesn't want to see a lot of unemployment going into a re-election campaign. So it'll be interesting ultimately to see what happens. I tell you one thing that's really interesting. There was a lot of chatter last year about Yellen leaving and there being a cabinet reshuffle. There will be no cabinet reshuffle at this point. There's no way that Yellen can leave at this point in time.
Okay, why not? I mean, cabinet reshuffle just because she's too important, or because it's a bad look?
No, because of the economy. She wanted to leave. You thought that the Commerce Secretary would move over. Terry McAuliffe may go to Commerce, but because Yellen is a household name and you have a mini crisis, you need to have someone that the capital markets really understand and appreciate her ability.
Are we underestimating the vice president? Could she not actually run and have a fair shot at it?
I think it would be very difficult for her to run at this point. I think she's better sticking on the ticket. But ultimately, if it's an open primary, I think you'll see these two governors who can raise a lot of money come to the forefront.
Okay, on foreign policy, and this is like your specialty, looking at what U.S. politicians can or can't do. I mean, do they need to continue bashing China on both sides of the aisle to attract voters?
Well, it's interesting. There's two things happening in Washington that's very interesting right now. The speaker and the minority leader are actually getting along.
What? Stop the press.
Exactly. I was just hosted the minority leader last week in New York, and I was like shocked. So that's one thing that's working. And bashing China works for both sides. It's not going to stop. The next 18 months is going to be very, very difficult for anyone dealing with China. You saw the TikTok CEO, he was hammered. He did a terrible job. And anyone coming forward on the Chinese side, I think it's just going to be very difficult for them at this point.
But is this one thing that they say in public and then go through back channels to make sure that they still have a relationship with China? I mean, the biggest economy in the world and second cannot not get along in this kind of
I think that
environment.
It works for both sides, right? It works for the Chinese government to say that they're standing up and being strong to America, but it certainly works for American politicians to say that we're going to push back on China. But also, there are real issues on the supply chain. There's real diversification needed. That's why you see things like the African Growth and Opportunity Act getting a lot more play, because it helps push back on China globally. So it's real, but America has to do more than lip service. They've got to put money to work. They've got to put actions to work if they really want to push back.
How long can the U.S. keep on supporting Ukraine? With weapons and money?
Forever.
Even if it's a Republican president?
Forever. I think that this is an existential crisis for the West. And it's very interesting that next year you'll have the U.S. presidency up, UK Prime Minister up, and the European elections. So there will be a stress test for Western democracy next year. So I think they're going to have to steadfast.
But what happened? I mean, I don't know what are the chances of Trump being president, but you hear a lot of Vladimir Putin just biding his time to wait for that to happen because he'll have an easier time going forward.
I don't see it happening, but there's a lot of chatter about that. There's also lots of chatter of Donald Trump's people saying that if he was president, he wouldn't have gone in. One really never knows what would happen, but certainly I think it'll be difficult for any president, even Donald Trump, to walk away from NATO and their allies on this situation.
But Morris, the U.S. needs China on Ukraine, so if you keep on bashing China, it complicates the matter significantly.
Well, there's always, you can speak with forked tongue.
Okay.
China and America needs each other. That's the fact of the matter. They need to get to the table and figure out a way to work together. But we have to understand, when economies are rising, that means ultimately someone's falling. And when someone's falling, they're worried. The American population is worried. The American government is worried. China is on the rise, and they really, really need to come up with concrete solutions. Rhetoric does not work when you're dealing with China. You have to have concrete solution that engages China, but also you have to have solutions that really put your money to work. Just for example, in Africa, the Africans are saying, America, we hear you, but the Chinese are putting up capital. So if you really want to play ball, put that $500 billion to work. Let's make Nigeria a construction site for America on the gas.
First of all, will they? And also there's a lot of questions from senior diplomats in Europe then saying, you know, the U.S. has taken care of their allies less. So what's an incentive, for example, for African countries to get them in more?
No, it's interesting. If you look at Africa, you look at Asia. These are two very different things. If you look at Asia, there's been a compact for Asia for a long time. Asian countries are worried. That's why you see the military buildup. People are spending more money. Japan, for example, is spending money on this. So they're really worried. Will America stand fast if they're needed? From an Africa context, it's not such necessarily a military thing. It's economic empowerment. The Africans are going to stand with whoever's going to empower them economically.
Morris, I find it incredible to see a very divided U.S. What's the way forward for this country to be less divided, frankly, on all issues?
The way forward is for more people like the speaker and the minority leader to actually work together, right? Find areas to agree on. And when you disagree, you can disagree without being disagreeable. So it needs leadership. This is one of the big things I talk about. There's a lack of leadership around the world. This is an opportunity for the Speaker McCarthy and Hakeem Jeffries, who are young men. They're both under 50, are going to be around a while to work together. So it's really the way America moves forward is the politicians, the leaders need to show the example and turn down the rhetoric.
Morris, thank you so much, as always, for your talk, of course, on U.S. politics. Morris Reed, partner at Actum, former advisor in the Clinton administration. Now, coming up, protests over judicial reform, flights curbed, and the sacking of the defense minister. We'll bring you the very latest from Israel as Prime Minister Netanyahu molds his next steps. That's next, and this is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
News breaks. No one covers the world like Bloomberg.
We've never seen anything like it. This was a decision that maybe was the best out of 3 very bad decisions, but it could prove to be a mistake.
She opposed Powell's
renomination. She called him a dangerous man in 2021, and now she is really pointing the blame at the Fed.
We're expecting that should be here in Brussels today. This is a meeting that happens regularly, but obviously today it will be all about the banks.
Bloomberg, your global business authority.
This is Bloomberg.
Media reports in Israel claim Prime Minister Benjamin Netanyahu is considering a delay to his judicial overhaul plan. Now, this comes after Israel's main trade union launched a strike affecting departures from the international airport and follows a night of heavy demonstrations. Joining us now is our Israel Bureau Chief, Ethan Broner. Ethan, so what exactly is the latest on the ground?
The latest on the ground is that there is an enormous struggle for the heart and mind of Bibi Netanyahu at the moment. There's a general strike, a kind of almost a nuclear option, bringing down, stopping the economy, preventing flights from going out, ending treatments, except emergency ones in hospitals, law places, and as well as the universities. On the other hand, those who on his right and his supporters are vowing that they're going to get out in the streets and show these guys what a real demonstration looks like if he does halt the delays. So at the moment, we don't know what's going to happen.
So, Ethan, where does Netanyahu, Israel, and the security apparatus go from here?
We don't know. I mean, obviously, if he decides to call for a halt, that could lead to a breakup of his own government from the right, or it could also lead those who are supporters on his right to go back out into the streets and protest as well. So it's very unclear where we're headed right now.
Ethan, is the only way to actually slow down if Netanyahu is going to save Israel's democracy?
Is the only way to slow down this legislative procedure is for him to say we're not going forward with it right now. There's a whole bunch of steps involved, but one of the key ones is on the floor right now, and it has to do with how judges are selected. If judges are selected principally by politicians, that many feel will lend the legal system to become kind of enslaved to the political system. People are very upset about that.
Ethan, thank you so much. Ethan Broner there in Tel Aviv with the very latest, so we'll see what happens, of course, going forward. Now, let's also look at European banks. If you look at what the stock price in Europe is doing, early gains for U.S. equity futures seem to have evaporated. If you look at European equities, they're still gaining, but not as much as before. Traders in for another possible bumpy week. Developments in the banking sector will be very closely watched. On top of that, we have many Federal Reserve officials talking, and then a key measure of U.S. inflation is due. You look at the European banks, Deutsche Bank gaining 3.2%. Bloomberg Surveillance Early Edition continues in the next hour. What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Look, I think we've done a pretty damn good job. People's savings are secure. The banks are in pretty good shape.
The Federal Reserve has to be much more vigilant in constraining excessive risk-taking in the near term. And yes, it has to continue fighting inflation.
They can do that within their existing authorities simply by being clear they are prepared to use systemic risk exemptions.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. The chairman of Credit Suisse's largest shareholder, the Saudi National Bank, has resigned. His comments helped spark a slump in the Swiss bank's shares. There's a buyer for Silicon Valley Bank. First Citizens has agreed to purchase the deposits and loans of the bank, whose collapse rocked the financial system. And in Israel, thousands protest against Prime Minister Netanyahu's plan to curb the power of the Supreme Court. Netanyahu fired his defense minister for criticizing his proposals. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. And at the end of this week, Matt, we get to focus on those normal things like inflation numbers out from the US and from parts of Europe as well. But right now, we're still dealing with the aftermath of what we've seen in the banking sector over recent weeks.
Yeah, it's amazing. I mean, we continue to get new news on banking. Now we've got the SVB takeover. We've also got news that First Republic will continue to be supported by the government, though they have yet to find out or to announce at least how they're going to do that. Let's take a look at how this is affecting markets. First off, here in the U.S., S&P futures are gaining, and they have been throughout the morning up by about 1/3 to 0.5%. However, for a brief period around 4 a.m., S&P futures and NASDAQ futures dropped below the zero level, so they were negative for a moment. This volatility that we've seen over the past few weeks, it's definitely here to stay, at least for another week. So keep in mind that even though we see gains right now, this could change. U.S. 10-year yields rising about 4 basis points right now to 341.72. So we're at a relatively low level here compared to the highs, but also much higher than we were during the crisis, the heart of the crisis, if we can call it that. The Bloomberg U.S. Dollar Index also feeling relatively safe, right? If this is a safe haven, if this is where people go when they're freaked out, they're not very freaked out right now at 1236. Last year, we were at a high of 1356, and over the course of the last few weeks, we've risen up above 1250. Now we're back down, and you're starting to see gains in other currencies. most interestingly for me, the euro, as the ECB remains kind of the final hawk, and I'm sure we'll see the euro quote soon. NYMEX crude down below $70. It is up 28 cents in the session, but right now it's 69.54, and we see Brent around 75 as well. So relatively low levels in crude, even as oil traders are forecasting gains. We'll keep an eye on the oil sector here, but for the most part, commodities have taken a hit along with the rest of risk assets. Take a look at what's going on in Asia. We have a big drop in Hong Kong. I'll get to that in a second, but the MSCI Asia Pacific down about 0.5%, so not so bad there. The Hang Seng had recovered to some extent, but then losses in Meituan shares as well as Tencent shares taking about 150 points off of the index. So even though Meituan had solid earnings for the fourth quarter, they beat estimates at least. Some analysts are out saying that the margin forecast is weak, and as a result, they're cutting price targets. So that's hitting the Hang Seng hard. The Nikkei closed up 1/3%. So a different story in terms of what's going on in Japan, and the dollar gaining a little bit of strength against the yen as well, right now at 131.13. So now, Anna, let's see what you've got going on in Europe.
Yeah, we are seeing a little bit of a rebound from those losses that we saw on Friday. Remember, Friday's session, Matt, was really deeply negative here in Europe. Most of the continental European markets were down by more than 1.5%. The banking sector was very much at the heart of that. Today, we see a rebound. We see a rebound in banks, and we see a rebound in broader stock sentiment. So European equity markets are up by just shy of 1% in France, by just more than 1% over in Germany. Let's have a look at some of the components that make this up. And we are seeing that rebound in the banking sector, up by 0.6%, not making up for all of the losses of Friday by any stretch, but certainly a little bit of a rebound. And that's true of Deutsche Bank. This has been really volatile. Matt, to your point earlier on, we've seen a lot of volatility here. Down 8% during Friday's session, up 5% straight out of the gates this morning, then paired those gains to be up just 1% earlier on, now up around 3%. A lot of uncertainty around this business on Friday, but I know that Citi analysts, for example, saying that the selling of Deutsche Bank on Friday was really irrational, and lots of commentators over the weekend struggling to find any kind of real serious explanation as to why we saw such weakness in that particular share price. Novartis, here's a nice good news story. This one up more than 6% as a result of the Swiss business announcing the results of a breast cancer trial. The trial of this particular drug showing some really interesting and positive results, and as a result, the Novartis share price goes higher. I didn't put the euro in here, Matt, but I did put the German 2-year yield because we had the IFO numbers out from Germany a little bit earlier on, and I wanted to just remind myself to mention those. Actually, the German 2-year yield moving in keeping with what we're seeing in the US and in other parts of Europe. So we're seeing those yields go a little bit higher in this morning's session. But the IFO data was interesting. It showed that the expectations amongst German businesses were actually on the rise. That was a bit of a surprise. And the IFO Institute themselves suggesting this is because of the underlying recovery story in the German economy after that terrible winter and expectations for a terrible winter, rather than the volatility that we've seen in some of the big banking names over recent days.
All right, well, we do see the euro right now trading at 107.68, so climbing a little bit against the U.S. dollar, and I'm sure we'll touch on that with Ben Rahm a little bit later on. Right now, let's get back to the banking story. The chairman of the Saudi National Bank has resigned just a couple of weeks after his comments to Bloomberg's Youssef Gamal Al-Din on Credit Suisse pushed the Swiss lender's shares into a tailspin and eventually forced the consolidation, the sale of the bank to UBS. Youssef joins us now from Dubai. So, Youssef, what stood out to you in this announcement after, I mean, not only wrecking Credit Suisse essentially with one statement, but also hurting his own investment in that bank?
Absolutely, Matt. The big bet on Credit Suisse cost the Saudis about, well, in excess of $1 billion now that you're counting the chips. The thing to bear in mind is that the resignation in itself is not necessarily a surprise. Over the last couple of days, some of my sources suggested that the final strings were being pulled. But this man in many ways personified that big, bold gamble on the Credit Suisse stake. And here's what he said on that day about the bank.
Absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
So an unequivocal comment there that sent the share price tanking. At the same time, you consider that the Public Investment Fund, so Saudi Arabia's sovereign wealth fund, has a 37% stake in Saudi National Bank. So you can imagine some of the discussions in the background. This was always meant to help Saudi National Bank get on the global platform, compete with other global lenders, and this is now a setback. Anna?
Yeah, so that phrase, absolutely not, that'll go down in financial history, won't it? How significant is the news then of this management change at Saudi National Bank? It's the largest lender in the kingdom. Is it specifically linked to your interview and your interviewee there, or is it a broader story?
Yeah, it's a bit of a broader story. So Saudi National Bank has actually taken the Credit Suisse news in relative stride, and it has outperformed some of its peers, both within Saudi Arabia and within the region. You take a look at how the stock price is performing as we speak, up about 1.5%. The Credit Suisse exposure was under 2% of the firm's market capitalization. Bloomberg Intelligence has done some fantastic work, and they think that the hit is about 50 basis points on the CET1 ratio. But taken together, now that Saudi National Bank is resetting credibility and trying to push forward perhaps with a bit of a new tone, this is all getting reflected in the actual pricing, and we'll see how it all evolves over the coming days, guys.
All right, Youssef, thanks so much for joining us. Bloomberg's Youssef Gamal Al-Din talking to us about the resignation of the head of the Saudi National Bank. Now, Credit Suisse is facing itself a possible probe and disciplinary action after it's been sold over how top managers ran the bank in the lead up to its collapse. Switzerland's banking regulator told a local newspaper that the bank had a cultural problem that translated into a lack of accountability. Really? Tom Metcalf, Bloomberg finance reporter, joins us now for more. So, Tom, this all seems very obvious, right? We saw it result in essentially the collapse of the bank, which has now been sold to UBS. How will it even happen?
Yeah, I mean, look, it's very much behind the news. And my sense of this is really the Swiss regulator speaking to, the Swiss population, getting polls out that suggest a lot of ordinary Swiss people are pretty annoyed by the government intervention, the fact that, UBS has been jammed together with Credit Suisse. And to me, this looks like sort of them trying to shift the blame and just bring in all the sort of scandal, et cetera, at Credit Suisse back into focus.
And moving to the US banking story, Tom, good morning, where we also have some news flow. Just coming in the early hours of the European morning, in fact, we heard that First Citizens, confirmation of that Bloomberg story, that First Citizens is going to buy Silicon Valley Bank. And the CEO of First Citizens suggesting this should add comfort, add confidence around the US banking system. Is that how this is going to be interpreted, do we think?
No, it should. This is kind of one of the big shoes to drop. This is what people were waiting for, to get a bit more clarity around, this regional banking uncertainty. So, yeah, no, coming over the weekend, and it looks so far, if you look at the futures, they're all largely up. As you'd expect, this is injecting a little bit more reassurance into the market, so I'm seeing a lot of green today.
So, but just, Tom, essentially, the Credit Suisse story really revolves around what happens to the domestic unit, doesn't it?
Yeah, I think that's what most people in Switzerland banking certainly are most focused on, and, the sense is UBS are doing everything they can to keep it. I think the interesting thing there is obviously it brings up the idea of, concentration in the market. UBS was obviously big in Switzerland already, and that, there's sort of going to be a bit more kind of pushback against that at some point. Doesn't look like so far, but that I would agree is sort of, A, it's the crown jewel of Credit Suisse, and B, it's kind of what everyone in Switzerland is focused on.
Well, they either need more competition or they're going to get a lot more foreign bankers involved in domestic corporate finance. Tom, thanks so much for joining us. Bloomberg's Tom Metcalf there covering some of the banks for us. Back stateside, the turmoil from SVB's collapse has impacted deposits for small banks across the U.S. Joining us now is Bloomberg Markets reporter Valerie Teitel. So, Valerie, what's the latest from the Fed's deposit data?
Yeah, we got this data on Friday after the close. It's the first print from that Fed's data that shows the extent of the deposit flight during the week of Silicon Valley Bank's collapse. Now, small banks in the U.S., this data revealed, lost 2% of their deposit base in those days around that collapse. Now, we have to remember that this is the main worry facing the U.S. Banking system going forward, that losing these deposits will possibly make these smaller regional banks pull back on their lending activity, perhaps tighten credit standards, and lead to somewhat of a mild credit crunch when it comes to bank lending to the main street. Now, in just 1 week, they lost $120 billion worth of assets. The market is going to be very, very on top of this release on Friday, and if it shows that this, the extent of the deposit flight has continued.
Yes, because it comes with a little bit of a lag, doesn't it, Valerie? So we'll again focus on that data when we get it weekly this Friday. On other news, in terms of the U.S. narrative, Minneapolis Fed President Neil Kashkari has been warning that recent bank turmoil has increased the risk of a U.S. recession. He spoke on CBS's Face the Nation over the weekend.
What's unclear for us is how much of these banking stresses are leading to a widespread credit crunch, and then that credit crunch, you're right, just as you said, would then slow down the economy. This is something we are monitoring very, very closely.
There's that credit crunch phrase again. Minneapolis Fed President Neil Kashkari speaking there just yesterday. What is his view? I mean, that's his view on where the credit story, I suppose, goes. But what about his view on deposit flight? Did we get any insight there?
He was a bit more positive about it, echoing the similar comments we heard from Powell and from Bostic on Friday, saying that the deposit outflows seem to have slowed down. Now, I think the positivity around these comments we heard from him yesterday is allowing the two-year yield to rise overnight, as we maybe think that the regional bank worries will quickly be over and we'll be back to thinking about how high and how quickly the Fed's going to hike rates into restrictive territory. Now, the pessimists would say these regional bank worries are not going to abate until the Fed cuts rates. They have a hard time competing with money markets to keep these deposits, and their business model isn't as profitable when the front end of the yield curve is this inverted. So the pessimists out there really think that this regional bank woe will continue until the Fed cuts.
All right, Valerie, thanks very much. Bloomberg's Valerie Titel talking to us about the Fed reaction to the banking issues that we've seen and what I guess bankers really want the Fed to do. Whether they're listening or not is another question. Let's take a look at some of the stocks that we're watching in U.S. pre-market trading. First off, Berkshire Grey, which is an automation company, a robotics company, actually founded by the guy who was the chief technology officer at iRobot. It's not related to Berkshire Hathaway. It's just out of Bedford, Mass. Up to date, 19% in the pre-market after news it'll be acquired, or the remaining shares that aren't owned by SoftBank will be acquired at a 24% premium to Friday's closing price, and that's why you see the big pop here. Then First Republic, and really take a look at a number of other regional banks, Key West, PNC, PacWest, all rallying today following a Bloomberg report that U.S. authorities are considering more support in some way, we don't know yet in what way, for banks. Of course, First Republic itself has been thrown a lifeline by some of the biggest banks on Wall Street, and also there is a new Fed facility from which they can borrow. It doesn't look like there's the kind of run risk that we saw at SVB. But as I said, you can see other banks rising on this report as well. For example, PacWest is up 7.5%. I think KeyCorp was up about 5% in the pre-market as well, Anna. So you're seeing these banks doing fairly well today. And, you know, we finished Friday on a positive note. We finished last week on a positive note, and we're kicking off today on in the same regard.
Yeah, Europe just catching up a little bit with that. So up by 0.9% on the Stock 600 as we certainly closed in the red for Friday's session. We will talk about the bank sector, what we've heard over the weekend, what it all means. Rakaya Ibrahim joins us, BCA Research Daily Insight strategist. We'll also talk about the tightening cycle stateside. If we do see a quote-unquote credit crunch, what does that do in terms of financial conditions? How much of the Fed's job does that do? We will also talk about protest activity in France, also in Israel. Protests escalate overnight in Israel. We'll be live in Tel Aviv with the latest on Prime Minister Netanyahu's plan to reduce the power of the Supreme Court and the pushback he is seeing to that plan. Plus, Jack Ma's self-exile, how the business leader's time away from China may be undercutting the country's push for private business. More on today's big tech story ahead. This is Bloomberg.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I've got a chart here in front of me. For those of you listening on radio, you can't see it, but you can certainly feel it. It's about volatility among three different asset classes, equities, FX, and bonds. Now, in March of 2020, we saw these indicators all spike up to the same level. Obviously, we were freaked out by the shutdown of global economies and the rampaging virus of COVID-19 that calmed throughout the pandemic. And then we started to see a breakaway of FX and bond market, especially volatility, from equity volatility in 2022. Now, it looks like, judging from the VIX, there isn't much volatility in equities. A lot of people will tell you the VIX is broken. But if you look at the MOVE index, which shows us bond market volatility, it's at a high that we haven't seen since March of 2020, indeed higher than it was then. Joining us to talk about why is Ven Rom, Bloomberg Markets Live editor. So Ven, what's going on here with the MOVE index? Why is bond market volatility now at a level that's frankly scarier than it was at the beginning of the pandemic?
Absolutely, Matt. I mean, if you were Rip Van Winkle from the fairy tales coming out of hibernation and wondering what's going on, if you looked at those VIX volatility, you would conclude everything is hunky-dory with the world. We know, of course, that there is nothing hunky-dory about the world, macroeconomic backdrop at the moment. So what's going on is the presence of zero-day to expiry options eclipsing and usurping the place of what used to be the VIX domain. Now, if you look at VIX options, they're typically it captures the maturity of options from 23 to 37 days. So you're talking about an average of 30 days. Whereas with zero-day expiry options, obviously, as the name suggests, there is no theta decay. And therefore, investors are thinking, why would we pay for volatility that we don't perhaps need it? Especially if you're going to position for, say, the non-farm payrolls data, you want to just pay for that particular event, calendar risk event. And therefore, zero-day to expiry options have become more popular and taken the place of VIX, and therefore, we see what we see.
That's really interesting. So the market finding other ways to express its nervousness around that volatility story. So you take us to early 19th century US literature when you reference the volatility there. Take us to an aviation metaphor for what you see for the US economy then, Van, because we spend a lot of time talking about hard landings and soft landings, but there are alternatives.
Evidently, there are alternatives, which I think is probably a go-around. Now, the economy was coming in for evidently a soft landing, if you believe Powell and co., but looks like the events of the past 1, 2, 3 weeks, starting with the Silicon Valley Bank failure, suggest that, this is an economy that may touch down pretty soon, probably doing it now, and then take off again if everything works out well for the financial industry.
Okay, we'll keep an eye on that then, Ven. Thank you very much, Ven Ram of the Bloomberg Markets Live team with his thoughts on the US economy and much beyond. For more market analysis, check out the Markets Live blog. MLIV Go is the function on the Bloomberg terminal. This is Bloomberg.
you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg Surveillance Early Edition. Coming up on the program, we'll speak to Ruqaiya Ibrahim, BCA Research Daily Insights strategist. What is the shelf life of a banking crisis? How far through the banking crisis are we? Lots to focus on when it comes to banks, but also inflation later on this week. We'll have a conversation with Ruqaiya next. This is Bloomberg.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live, and it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The chairman of Credit Suisse's largest shareholder, the Saudi National Bank, has resigned. His comments helped spark a slump in the Swiss bank's shares. There's a buyer for Silicon Valley Bank. First Citizens has agreed to purchase the deposits and loans of the bank, whose collapse rocked the financial system. And in Israel, thousands protest against Prime Minister Netanyahu's plans to curb the power of the Supreme Court. Netanyahu fired his defense minister for criticizing the proposal. I'm Anna Edwards in London with Matt Miller in New York. And coming early in the European hours, Matt, we got that news around SVB's assets. Finally, US authorities finding a buyer, a home for those, designed to give some comfort, I suppose, to investors and to risk assets. And US equity futures trying hard to stay in positive territory.
Yeah, absolutely. And of course, Bloomberg also came out with a report, Bloomberg News, saying that the Fed and other authorities are continuing to consider ways to help banks that are in crisis mode. So that's really helped futures. I mean, to be fair, we closed up on Friday, and the close was a positive for the week. We were even positive the week before that. So 3 out of the last 4 weeks, we've been up. The problem is that one of those weeks we were down 4.5%. So S&P futures are up again to kick off the week. Expect some volatility because we've seen volatility in the futures already, right? Around 3 a.m., futures started to come down from 0.5% up and eventually went into negative territory before bouncing back to the almost 1/3% gain that you see before you right now. We do see investors letting go of the perceived safety of government debt. So that's another good news. Another piece of good news. Now, U.S. 10-year yields are up about 6 basis points at 343, 344. And the Bloomberg U.S. dollar index is also down right now, only 1/100%. Nonetheless, this signifies that investors aren't looking for safe havens like the greenback. NYMEX crude is up a little bit, 32 cents a barrel, but still holding under $70. So on the one hand, that signifies this lower level for crude that investors are still not terribly optimistic about the economic prospects in the future. On the other hand, it makes it easier for businesses, factories to operate, at least cheaper for them to operate, and you'd hope that also translates into lower prices at the gas pump. Take a look at some of the movers in the market. Berkshire Grey, not related to Berkshire Hathaway, but a really interesting company which makes robots for factory automation. It was founded by the guy who is the chief technical officer for iRobot, maker of the Roomba. It's up 21 cents. Anna, do you have a Roomba yet? I know there was talk about you getting one. First Republic Bank also gaining on that Bloomberg News report that the Fed and other regulators are looking at ways to continue to support this bank, and on optimism that it's not at levels near a run that we saw driving SVB out of business. And that's bringing other banks up as well. PacWest is up 8.5% in the pre-market, but you look at KeyCorp and a number of other regional banks also rising just a little bit less. Did you not have a Roomba? Did you never have a Roomba?
No. I remember this conversation. No, yeah. I was unsure what it was, and you kindly explained it to me, Matt. But you know that I don't have a reputation for being the earliest adopter of new technology. Let's just leave it there, shall we? So no, I don't have one. European stocks then up by just shy of 1%. You closed in positive territory, Matt, on Friday. We closed deeply in negative territory. The banking sector led us lower, but we're rebounding from some of that, and keeping our nerve, it seems, a little as we go through the first hours of the European trading day. We've seen a lot of volatility in the Deutsche Bank share price. It was down by 8% in session, down by more than that in session during Friday, but by the close down by 8%. Today it raced out of the gates up by 5%, went down to up 1, now it's up 4. So we do see a little bit of resilience, or a bounce back at least, coming through on Deutsche Bank. I know Citi analysts were saying that it didn't really make any sense, the level of selling that we'd seen. Irrational was the word that they used on Friday. And Novartis is up by 6%, a breast cancer drug coming out of trials with a really positive outcome. And so that's doing well for the Swiss giant of the pharmaceuticals industry. And here's the euro, 107.62. And Matt, I've seen different analysts over the weekend, some from Vanda Research, some from Goldman, talking about their views on the euro and whether it is too highly valued or not at this particular juncture. And a lot seems to come down to whether you think that the ECB is still going to be hiking more than the Fed. It's those interest rate differentials. That's part of the story. In terms of the data flow today, we've had the IFO numbers out of Germany, and that showed in the expectations number a surprise rebound in expectations around the German economy, despite all of that banking volatility that we saw last week.
All right, so we'll continue to watch, certainly I'll continue to watch the euro, because I think it's interesting if the ECB is kind of the last hawk standing, what happens to that currency versus the dollar, especially as investors are more sanguine about the banking industry. Let's talk to Ruqaiya Ibrahim right now, BCA Research Daily Insight Strategist, about that calm in banking right now. Ruqaiya, we did see what a lot of people referred to as a crisis over the last few weeks, obviously sparked by SVB, but then kind of rounded out by the sale of Credit Suisse, a fire sale to its crosstown rival. We didn't see the TED spread blowout, and when I was a kid, that was what you looked to, the indicator that you looked to signal a crisis or not. What's your take on this, especially as LIBOR is supposed to at some point go away?
Right, that's true. LIBOR is getting phased out, and so you should probably focus on alternative measures. And so some key measures that we're looking at is the difference between the forward rate agreements and the OIS, the overnight interest rate spread, as well as the 3-month repos and the OIS. And both of those measures actually are not yet at levels that were during the initial phases of the COVID pandemic or during the GFC crisis. And so that signifies that, investors, while they are concerned about the banking turmoil that's going on, you call it a crisis, but they're not yet pricing in this broad-based impact on the economy and the banking sector. And we generally tend to agree with that. I think that there are going to be lingering concerns after this gets settled, hopefully in the coming weeks and months. For example, the bank lending standards are going to tighten, and that's going to have an impact on the broader economy. But we don't see this as morphing into a broader crisis. Now, of course, as you mentioned, the buyout of SVB is positive. At the end of the day, this is a confidence of a crisis in confidence among the banks, and so that should put some improvement in the confidence. But, at the end of the day, it's animal spirits, and it's very hard to know where those are going to go. So we'll be watching those spreads carefully.
So, Ruqaiya, having said that, what do you think about some of these assets? Have they been discounted enough that they're interesting, or, has the market been supporting them well enough throughout what some have called a crisis? Not me, really, but, it was definitely turbulent times. So have the prices taken enough of a hit that you can go in there and do a little bit of bottom feeding?
In the case of financials, no, we don't think that those are attractive yet. At the end of the day, the macroeconomic environment is not positive for financials. As I mentioned, bank lending standards are going to tighten. That's going to lead to a reduction in loans. The economy is darkening. Even if it doesn't lead to a crisis in the immediate term, it is signaling that monetary policy is getting tighter. Central banks are still hiking interest rates. And so that's negative over a cyclical environment, a 6 to 12-month environment for the economy. And so that means that, banks are going to continue to underperform, in our opinion. It's not yet a good time to bottom feed.
And so on that subject, good morning to you, Ruqaiya. On that subject, are we talking about something that you would call a credit crunch? Is that what we're looking at? And is that going to be the key piece of data that you watch for, along with the things you were discussing there with Matt? Also looking at the credit impulse in the US economy. That's going to be key for central bank policy, of course.
Absolutely, and that's what we heard actually from Chair Powell last week during the Fed press conference, is that, you know, what he's watching for, they're continuing to hike, or they continued to hike interest rates last week, and what they're really watching for in terms of the impact of this banking crisis is the impact on lending and lending standards, and that impact on the broader economy. And I think that that's pretty much what central bankers are watching right now. They still see inflation as being problematically elevated, and so they're not ready yet to pivot to pausing and then easing maybe. But what they're really watching for is that this banking turmoil translates into something broader for the economy, and then that would cause them probably to adjust their policy.
And we know that war in Europe has had something of an inflationary impact, Ruqaiya, on the European economy and beyond when we look at what's happened to commodities. Thinking about the impact of war on the financial universe that we talk about, Ruqaiya, I know that the defense sector is front and center for you. Where do you see the money going, essentially, in that sector?
Absolutely. I think the war in Ukraine really highlights the need for more spending on defense among the Europeans and the NATO. And so actually, what at BCA, we've estimated that there should be an additional $240 billion going to defense spending until the year 2030. And so what that means is that there's going to be this injection of demand into the defense spending sector. And aerospace, European aerospace and defense is one of our favored equity sectors, both within the European equity universe as well as relative to the US. So we think that that sector is going to benefit quite a bit, especially if you take a look at just the broader environment, geopolitical environment. We have a multipolar world. We have Russian instability, going forward, and that should support the sector as well.
Hey, Ruqaiya, we were talking earlier with Ben Rahm, our currency strategist, about the real bifurcation that we've seen in volatility indicators. I'm not sure if that's the right word to use, but I hear Tom Keene saying it a lot. In any case, we have the VIX showing a whole lot of nothing going on, but the MOVE index is like to the moon right now. More volatility in the bond market than we saw over March of 2020. What do you make of this discrepancy?
Well, I think in equities, if you take a look at what has been helping equities is, that the fact that bond yields have come down so much, and that has supported, for example, certain equity sectors. If you take a look at information technology and communication services, these long duration equity sectors, they have benefited from these lower bond yields. But going forward, I think that, as I mentioned, in this macroeconomic environment over a 6 to 12 month horizon, where even if the banking crisis or the banking turmoil settles down, monetary policy is getting tighter. That's definitely not positive for cyclicals, for equities in general, for risk assets. And I think that, that's going to lead to increased volatility as we move forward.
Ruqaiya, thank you very much for your time. Ruqaiya Ibrahim of BCA Research. Coming up on the program, we'll talk about protest activity in many different geographies. Protests escalating overnight in Israel. We'll have the latest on the Prime Minister's plan to reduce the power of the Supreme Court and the pushback he is receiving against those plans. That's what we see in the streets. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. they're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
From our studios in New York and San Francisco, our new hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech at a new time, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, French President Emmanuel Macron is facing increasingly violent protests that risk scaring off investors that he has spent the past 6 years courting. Bloomberg's Caroline Conan reports on what's at stake for the country.
From this to this. Clashes between protesters and the police have become a regular scene of Parisian life, with beans burning and tear gas reminding of the student revolution of May 1968. Even in the southwest city of Bordeaux, the gate of City Hall was set on fire. Meanwhile, the garbage has accumulated in the French capital. It's a very different image from the dynamic, modern France promoted by Emmanuel Macron when he was first elected in 2017. The 45-year-old former banker wants to raise the minimum retirement age from 62 to 64. Most French are opposed to this, giving Macron two major problems. Problem number one, critics say he's touching the very heart of the French way of life and social model. Problem number two, his method. Lacking a parliamentary majority, the government used a decree to force the reform through without a vote. That has angered millions of French people. Macron's popularity has fallen to the lowest in 4 years. Protests by the so-called yellow vests against fuel taxes blighted his first term. Now the deep opposition to his pension overhaul could threaten the remaining 4 years of his reform agenda and leave the door open for the National Rally candidate Marine Le Pen.
That was Caroline Conan in Paris talking about the protests there. Now over in Israel, thousands have taken to the streets to protest Benjamin Netanyahu after he fired his defense minister. Joining us now for more is our Israeli bureau chief, Ethan Bronner. So Ethan, what's the latest on the protests there?
Well, they were very, very vigorous overnight, and then there were water cannons used by cops and so on, and it was cleared away, but the highways were impassable for many hours. And then there was a little bit of a break while we were trying to figure out what happened. Right now, they're coming back out, tens of thousands of people back out on the street. Some have now shut down the highway near Tel Aviv. Some are gathering near the Parliament building, the Knesset, where everyone is waiting to see what the Prime Minister says. It has been announced that he was due to speak. It's already 2 hours beyond when he was supposed to give his speech in the Knesset, in the Parliament, possibly halting this judicial overhaul.
Yes, I was going to ask, where does Netanyahu go from here? Where does the security apparatus go from here? Because there had been some local reports, I think, in Israel that suggested he was considering at least delaying the changes he wants to make to the judiciary.
I mean, he's obviously been in a very, very difficult position, facing enormous pressure from the business community, from the military, from the trade unions that have shut down much of the economy today, stopped flights going out of Ben Gurion Airport, and the business community that has built this country into one of the wealthiest in the world, which is opposed to these changes. On the other hand, the more populist supporters on his right were insisting that he must go ahead with curbing the power of the court, because a lot of what the court has done has angered the right. we shall see where he ends up. But the word at the moment is that he's likely to delay rather than to stop the procedure forward of these judicial changes in the Knesset.
All right, Ethan, we'll continue to follow this story with you. Thanks so much for joining us. Bloomberg's Ethan Bronner there in Tel Aviv talking to us about those protests. Now we've got chaos and strikes in Germany as well, or at least you should be prepared for that today. Air and rail services there joined the UK and France by protesting for higher pay. Bloomberg's Oliver Crook joins us from Berlin to give us the latest. Oliver?
Hey, Matt. Yeah, so we have two unions teaming up here. You have the services union, Verdi, and also the rail transport union, EVG. So they started these strikes at midnight tonight. This has been pretty well telegraphed, and it's not the sort of chaos that we're seeing, in Israel and in France, but it is, disrupting all kinds of travel. You have flights that have been grounded. Long-distance regional trains across Germany are closed. And as you'll know, Matt, the S-Bahn and U-Bahn distinction, the U-Bahn is running, the S-Bahn is not. And these are all the sort of train services across Germany that are basically ground to a halt here, and as well as the air travel. But we got a bit of that taste of that chaos yesterday with some issues with Deutsche Lufthansa, and it's all down to wages, right? So the Verdi is demanding a raise of 10.5% of the wages. They're now locked in their third days of talks, and what's been offered is about a 5% raise, which is just not cutting it at this point. So this is all down to the same conversation we're seeing across the world and across Europe. Inflation rising up, and of course we get inflation from Germany later this week. In February, we had the figure at 9.3%. We're expecting that to come down a little bit, but still 7.4% may not be the kind of reassurance that Germany and the rest of Europe are looking for.
Yes, I suppose that there's a sort of race against time here, isn't there, Ollie, when it comes to the rate at which inflation comes down in Europe and the extent to which protesters want to carry on asking for more money. We've seen some pay deals being done here in the UK. Actually, incidentally, since we got the budget, there have been a flurry of pay deals being done with various unions sort of outside the spotlight. We wonder where this one goes from here in Germany.
Indeed, and there's not really a sort of a path for this to be completed anytime soon. Again, it said they were asking for 10.5. They're only getting 5% in two different installments. There's also this one-time bonus tax-free of 2,500 euros per employee. And again, this is not really moving the dial substantially enough forward. Again, but this has all been sort of flagged. The question is over the Easter vacation. So we have from local German papers that there is not going to be any union strikes for around that. But of course, that would put the real squeeze on travelers across Germany. And if we see this really further escalating, it could become a much larger problem here in Germany. At a time when already we're seeing some issues with the coalition that are sort of emerging, where they're still locked in talks over this weekend trying to solve some of their issues. So again, not welcome here in Germany.
Okay, well, at least we see a little bit of calm restored to German banking, up by 4.9% on the Deutsche Bank share price, which would probably be a relief to many in Frankfurt. Oliver, thank you very much. Oliver Crook joining us there from Berlin. Coming up, a look at the market-moving events that we are watching out for this week. That's next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that pandemic will be behind us in some way, do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Let's take a look at what's coming up this week. Later today, German Chancellor Olaf Scholz holds talks with Dutch Prime Minister Mark Rutte. Watch for any comments there on the alliance, NATO, as well as what's going on in Germany. We just heard from Oliver Crook. On Tuesday, the U.S. Senate Banking Committee holds the first of several hearings on the collapse of Silicon Valley Bank and Signature Bank. That's followed by a House hearing on the recent bank failures that comes on Wednesday. We will get U.S. GDP data on Thursday, so that's the start of a lot of economic data coming out. Friday brings euro area inflation. We expect headline inflation to fall sharply in March due to reduced energy costs. Core inflation may rise slightly again. And then after that, we get inflation data out of the U.S. We get the PCE, which is the Fed's preferred measure of inflation. So it'll be interesting to see. I think the PCE headline number is expected year over year at 5.1%, which is still higher than the Fed's highest target rate.
Yes, we'll be looking for that later on in the week, won't we? A return to the inflation conversation. Might that be a relief after all the turmoil that we've seen in the banking sector of late, Matt? And we get the Eurozone inflation print as well. Interesting that we've seen Joachim Nagel, the Bundesbank president, saying that the ECB is determined on inflation with markets in view. So ongoing conversations about the extent to which we'll see tightening. And that seems to be an interesting one that a lot of investors want to talk about, the extent to which the ECB might hike more now, even as inflation seems to be coming off the boil in Europe.
Absolutely, but we heard also from Luis de Guindos, the Spanish banker who is, I believe, second in command at the ECB, and he says they're going to have to go meeting by meeting now, considering the bank turmoil.
Yeah, much more of a focus on the data and meeting by meeting and less focus on providing forward guidance. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.
Chris, can I ask my landlord for a rent cut in the next couple months? Like, is that reasonable?
Well, I guess it depends when you signed your lease, Joe. It sounds like you got kind of one of those pandemic deals that, particularly in New York City, where rents actually fell really sharply in that first year of the pandemic. So we are really seeing the market having turned a corner a little bit over these past few months. Prices have been coming down for 4 straight months now in our national rent index.
Wow.
But you know, if you're still paying that late 2020 level, then you might not necessarily be eligible for a discount at this point.
Good point. All right, I have another question, which is like, so I have 2 kids, but unlike other people, I actually am cool, and I don't want to move to the suburbs. Like, I want
This episode is just Joe taking like advice on handling his rent.
I just want to point out, I really like my landlord.
You love your landlord?
She's very attentive. We have a very good relationship. So even though I started the episode saying I was anxious, if she is listening to this, I hope she hears that I really enjoy where we live, and I really enjoy our the landlord.
She should factor your consistency into her pricing algorithm.
We've never been. Yes, exactly.
Excellent.
Fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Inflation's coming down, but we don't think it's going to come down quite as fast as markets are pricing in.
I think inflation's really dying out quick right now, but I think it's probably got another leg up.
I don't think we've licked the inflation problem, and so that's why we're not anticipating that the Fed's going to cut rates.
They are still fighting inflation. They are still dealing with their core mandate.
If we listen to Chair Powell, effectively he was saying, we can't really give you forward guidance at the moment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Monday after an hellacious week last week. Some of us are back. Some of us are on assignment. John Farrow on assignment this week. We'll have to see where that goes. His entourage said he couldn't be with me, and I said, well, okay. But Lisa's here after surviving last week. I was not here. Give us one anecdote of the exhaustion you, John, and our team faced last week.
Well, I think that you're highlighting it quite well with your facial hair. And I will say, I know that you're going to blame me for it, but I just want to make this very clear. You alone are responsible for the situation over here.
No, it's my stylist, trust me. Yeah, she had a pina colada in her hand.
Well, no, but in all honesty, the takeaway is that people are completely repricing their expectations of rate hikes off the table and rate cuts very much on the table. Suddenly, a massive repricing. The disinversion of the yield curve. Yeah. The most, poised to be the most for a month going back to 2008, to give you a sense of how much and how quickly people are repricing in rate cuts.
And what we're going to see with a great set of conversations today on equity. Ben Laidler with us in a moment. Michael Wilson of Morgan Stanley down the road as well. Adam Posen will join us for the essay of the weekend. No question about that. Dr. Posen later on in the 8 o'clock hour. And to me, I go back to first principles, which in your world, Bramo, is BTMM Go. And I'm sorry, there's a number. Jim Bianco says there's a number of 5% ways I can earn money on that screen.
Yeah, there is. Although if you got in a while ago, you probably could earn more because you could see how rapidly we're repricing short-term rates just simply because of these rate cuts and these expectations. I will say the big takeaway for me last week was that nobody seems to have his handle on anything, number one, except that credit conditions are tightening, and that's going to restrict the economy, number two. And then three, the fact that we're looking at a market that is all over the place. Just go home and not trade, and that's probably the best thing, because we're basically flat in the month for the S&P.
There's some winners there as well, and there is some action. Keith Horowitz at Citigroup, I noticed, putting a buy recommendation on MTM up in Buffalo and KeyBank of Cleveland as well. So there's a little bit going on here. It'll be fun to get started on a week with a lot of economic data. Michael McKee to attend as well. On the data front, sort of like Friday, there's a lift in the equity market, and rather than futures up 20, the levels. Can you imagine with the angst of last week? SPX 4,000, Dow halfway back to 33,000, NASDAQ 100 near 13,000 as well, the VIX at 21.94. Lisa, maybe that doesn't scream bull market, but nevertheless, resilient equities given the uproar.
Well, that's the reason why I say, you know, almost the best strategy for people is just hiding under their beds and just hoping that things are going to be okay. Because if you wait long enough, they'll go back to what they were just a few months ago.
I'm going to look at West Texas Intermediate, still under $70 a barrel, alluding to what Lisa said about a slowing guesstimate on the American economy, 69.79 West Texas Intermediate. We got a further inversion today, all on a correlated risk-on feel. I don't want to oversell that. I got lots of other things to talk about, but I think before Ben Laidler, I need a briefing. Where do you begin? Do you begin with the France-Israel protests, or do you begin with our world? I'm not sure which.
There are a lot of geopolitical issues that I am watching, or what we heard about, you know, Belarus and the potential for nuclear threat with Ukraine. I mean, there are a lot of very important issues geopolitically. When it comes to markets, people are trained on any wisdom they can glean from policymakers. And you hear from the ECB member Isabel Schnabel at 11 a.m. She speaks at Columbia University, 1 p.m. Eastern Time. Bank of England Governor Bailey to speak at the London School of Economics. Very curious to hear whether we start to hear a shift in tone from the German and the ECB members, given how hawkish they have been. Then at 1 p.m. we get a $42 billion auction of two-year notes. I am curious. I know on one hand you could say, who cares, right? On the other hand, we're looking at a situation where there's been a massive repricing, complete whipsaw action in terms of day-to-day volatility.
Right.
So suddenly, where are we now?
Well, for radio, this is a John Farrow chart from a 5.10 down to 3.XX. Is it a flight to quality? I mean, is a two-year yield just simply flight to quality?
Well, I mean, that's something that people are talking about. There's also a complete repricing of how much the Fed's going to cut rates this year, and you can see that in Fed funds futures, which correlate
Are we sure
to
they're
some of
going
that
to cut
move.
rates this year?
Well, they say no. The market says
You know
yes.
how I
We
feel
shall
about
see.
this.
And then at 5 p.m. we get Fed Governor Philip Jefferson having a conversation at Washington and Lee University. Do we get any clarity from?
They were in my bracket. Okay, continue.
Yeah, good. I'm glad to hear it. How's that bracket doing? Honestly, there are real questions about what kind of clarity these policymakers can give at a time where there's so little clarity. I mean, we heard from Neil Kashkari yesterday. He came out and he basically was like, it's too early to say anything because we don't know how much the credit conditions are going to tighten at smaller and medium-sized banks as a result of some of the heightened funding concerns.
I would suggest we are in a crisis. The two-year yield 3.92%. He has been wonderful about courage to be in the market. Benjamin Laidler joins us now, global market strategist at eToro. Ben Laidler, simple as I can, where do I find the courage this morning to own equities?
I think, if anything, you should be more positive equities now than a month ago. I think this bank scare, and I use that word rather than crisis, I think that accelerates everything we were expecting this year. I think growth is going to slow faster, inflation's going to come down faster, and interest rates are going to come down faster. So where a few months ago we were looking for a sort of painful U-shaped recovery, which is going to take some time, now I think we're looking for a V-shaped recovery. Markets are forward-looking. I think they're looking to the other side of that chasm. Yeah. We have got a chasm to get over, but I think that's where markets are taking some inspiration. One, two, you know, markets are not economies. I mean, these stock markets are very long duration, you know, big tech, defensives. That's what's going to do well here with lower inflation, lower bond yields. It's the real economy, which is not particularly well represented in the stock market, that's going to take the sort of here and now pain of these tightening financial conditions.
Right, Ben, I thought of you this weekend when I saw the new concentration in Microsoft and Apple. I think Liz Ann Saunders over at Schwab was highlighting that. Ben, we've been here before. What is different this time about the concentration in cash flow persistent giants like Microsoft and Apple?
So what do you look for in this environment? You look for things that have, you know, lots of cash, fortress balance sheets, high profit margins, defensive businesses. Yeah, you've got the traditional defensives, but you've also got big tech. And what else do you look for? You look for those long duration assets that benefit from lower or at least capped bond yields. And that's tech and that's traditional defensive. So I think they tick all the boxes. And the things that are going to hurt here are the more cyclical assets, the ones that, you know, where earnings are going to fall faster than we thought. So, you know, commodities, you know, cyclicals. You know, so I think you still own the market. You just own maybe different things than you were owning a few months ago.
At least at the heart of this in crisis, and let's agree we're still in crisis, is index versus active. And then how narrow is active? That seems to be the debate.
Well, and to Ben's point, and this has sort of been the counterintuitive feature of what we've seen over the past month, is that tech has outperformed. We have seen this again and again this year, even after everyone said this would be the big area of underperformance. How much can we count on rates being perhaps a bit lower than some projections, perhaps earlier in this year, as boosting these stocks versus questions around whether the valuations are still too high in an era of slower growth and lower multiples?
I think that works for them. In a world of no growth, if you have some growth, and I still think there's this underlying tech adoption story which continues to give them a decent growth runway, people are going to pay for that. And I also don't find the valuations particularly demanding. I mean, it's a massive derating last year, and I think that long-term growth profile, the fortress balance sheets, I think they're all worth paying for. Clearly, there are differences within tech. It's a big universe, but I think those big tech names on around 20 times earnings, I actually find them reasonably good value.
How much are you watching, Ben, the idea that we're seeing Tim Cook go over to China to talk about business, that you are seeing increased rhetoric between the U.S. and China when it comes to a lot of technology? I'm thinking about TikTok last week. How concerned are you about how that could affect valuations going forward if that pressured some of the international businesses?
Yeah, absolutely. I mean, it's a risk. Think about semis. It's nearly a third of the semis market, and clearly this isn't helping. That's going to be shaving off some of that growth. But again, we're talking about less tech earnings, problems with China. I mean, we could have had this conversation, 6, 9, 12 months ago. I mean, I have to hope that quite a lot of that's in the price. What's new here, I think, is the accelerated growth slowdown, the decline in bond yields. That's what I think we're resetting for. And I do think that's positive for traditional defensives and big tech.
Ben, tell me about buying Europe right now. I was on the phone this morning with our Stephen Ahrens, encyclopedic, on the improvements we've seen over 24 months at Deutsche Bank. And he's working, folks. You're going to see Mr. Ahrens with stories here from Bloomberg, from Frankfurt through the morning. Ben, not so much on DBK, but for a guy like you with your London heritage, what's the opportunity in European banking stocks challenged?
So Europe is very different from the US, both good and bad. On the good side, I think European banks have more capital. I think they're more tightly regulated. I think they have better liquidity. And I think a lot of this is just because, the Eurozone crisis was more recent than the global financial crisis. That's the good news. The bad news is, if a bank does go down in the European Union, the impact is going to be much, much greater than it is in the US. Loans to GDP in the US, 50%. Loans to GDP in Europe are twice that. European companies borrow from their banks. US companies don't borrow from their banks. They borrow from the bond market. So, I'm reasonably relaxed. You've also got, Europe has so far had much better earnings momentum. We saw that in the fourth quarter, had much lower valuations. Growth has been sort of firming up. So, all that's good, but just sort of keep at the back of your mind here. If we do get that worst case scenario, which I don't think we're going to get, just to be clear, but if we do get it, the shoe goes to the other foot. Europe's much more exposed.
Ben Laidler, thank you so much for getting us started on this week of interesting news, to say the least. Benjamin Laidler's with eToro. PCE deflator, whatever, later this week. I mean, I guess we're all, forgetting about, FRC and the banks and all that. The answer is we're still where we were a month ago. We're hanging on inflation data, right?
Well, this is going to be important. The PCE deflator is what the Fed looks at, and they clearly are still concerned about inflation. They're clearly still willing to hike rates at a time where they're not seeing the progress they were hoping for.
We are seeing a lot here. A headline just out on a merger in education finance. We'll give that to you here in a moment as we go to break. On the equity markets, Ben Laidler, we continue strong in the 7 o'clock hour. Mike Wilson of Morgan Stanley. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The failed Silicon Valley Bank has a new owner. North Carolina-based First Citizens Bank shares will buy about $72 billion of SVB's assets at a discount of $16.5 billion. Now, as part of the deal, the FDIC will get stock appreciation rights in First Citizens worth up to $500 million. Authorities took extraordinary measures to shore up confidence in the financial system after Silicon Valley Bank collapsed. In Israel, Prime Minister Benjamin Netanyahu is considering a delay in his judicial overhaul plan after a night of enraged demonstrations. Now, thousands took to the streets after Netanyahu fired his defense minister for criticizing his plan to reduce the power of the Supreme Court. Meanwhile, Israel's main trade union launched a strike affecting departures from the international airport. Ukraine is demanding a meeting of the UN Security Council on Vladimir Putin's announcement on nuclear weapons. Putin says that Russia will place tactical nuclear arms in Belarus. The value of a Security Council meeting is unclear since Russia could veto any resolution or action that's proposed. North Korea has test-fired 2 more ballistic missiles, adding to a recent barrage of launches. Kim Jong-un's regime had no immediate comment. The launch came as the U.S. and South Korea conducted their largest amphibious exercise in about 5 years. And Twitter is looking for whoever leaked parts of its proprietary source code. The code was posted on GitHub, the widely used code repository that's now owned by Microsoft. GitHub complied with Twitter's request to remove the data, but Twitter now wants it to identify anyone who posted, downloaded, or uploaded its code. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm wondering whether you would be open to assisting further if there was another call for additional liquidity from Credit Suisse.
The answer is absolutely not, for many reasons, outside the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in.
There is a certitude in the voice of the interview of the year for Bloomberg Television already this early in the year, Youssef Gamal Eldin. They're changing the world and particularly changing the Swiss world with a conversation with the Saudi National Bank chairman. Lisa, I want to pause here. I had the privilege of aerospace engineering with Ruth Rebecca Struick and the others at the University of Colorado when this gentleman was at George Washington. And there was a huge contingent of Arab royalty, Persian Gulf royalty in our engineering classes, developing that certitude. We know what we're talking about. I'm as guilty of that every day as anyone. And this poor guy got run over as a civil engineer from George Washington University not thinking about the ramifications of certitude.
And the news of this morning is that Ammar al-Qudari, who is the chair of the Saudi National Bank, resigned after making those comments as head of the Saudi National Bank.
Right.
Evidently, it's expected that this bank will have lost $1 billion on their investment in Credit Suisse, or potentially that much. So this is the problem right now, is that we're looking at a situation where people are trying to autopsy how much that interview with Bloomberg Television and Yusuf really led to some of these concerns. Did you see over the weekend that one of the Swiss authorities said that Credit Suisse wouldn't have lasted another day?
Yeah, I read those articles very carefully. I thought the Financial Times did a great job summarizing as well. And I would say it's still ongoing. What struck me there, and we've got to move on here to American banking, but 70+% of the Swiss people are really not happy with this transaction.
On every level. This is also the banking capital of the world. That's where their claim to fame is. So it's a pretty big black eye for a lot of people.
We're going to bounce across the Atlantic today, back and forth and back and forth. And now we go to the Atlantic, to the northern climes of Maine. And Gerard Cassidy, he's been such an advantage to us with RBC Capital Markets on the banks. Is it all quiet on the Cassidy front today, Gerard? I mean, are we beyond the crisis? I don't buy it for a minute.
Tom, I think the crisis has really quieted down, and I think as the deposit flight has pretty much, I think we're going to find by the end of this week, slowed down to a trickle. You know, the numbers came out, as you probably saw late last week, and the deposit outflow from the smaller banks was not that material. That was less than 2%. It was far less than I think some of the folks were thinking, and therefore it is calming down. And you saw, of course, that Silicon Valley, the FDIC was able to sell that over the weekend to First Citizens. So both of the failed banks have now been sold to private banks or banks that are publicly traded. So we're moving in the right direction. Is it the all clear signal, Tom? Probably not, but we're getting darn close.
Do you think, Gerard, that the calls for deposit insurance on a more generalized scale were overblown over the past few weeks, that the need for that kind of backstop and certainty was overstated?
Lisa, thank you for saying that. I couldn't agree with you more. I think what people are finding out is that most depositors have confidence in their banks. And that being said, when you break down the size of our banks, less than 100 million in assets or less than 10 billion in assets, the majority of those deposits in those banks are already insured by the government because they're less than $250,000. That doesn't mean they may not look at a revision of lifting up the deposit insurance levels at some point, but I think it was, to your point, overblown and overhyped. And that was part of this whole problem, was unfortunately it spread like wildfire on social media. And I think that's one of the biggest issues that has to be addressed as we go forward.
So there's a conflation here. On one hand, you have the potential for bank runs, right? And that was something that really spurred the immediate kind of concern. But then there's this question of just deposit flight, that a lot of people are withdrawing their money from banking accounts just generally in order to go into money market funds and other higher interest paying rates. And this is the issue, because you're seeing small banks, according to the data, lose deposits at a much faster clip than larger banks. So at what point is that the real problem? It's a profitability problem and it's a competition problem as well as a lending one.
I would say that the mix is changing, to your point. When you look at the data from the Federal Reserve, you'll notice that something what they refer to as other deposits, which are generally the non-interest bearing or low interest bearing deposits, have fallen more aggressively, both for the large banks and small banks, since rates have started to go higher. What they've replaced that with, though, is time deposits. So CDs that, you know, Tom might remember back in the 80s. You could get a CD for, 13% for 12 months. Those types of instruments are coming back. And believe it or not, Lisa, back in the 1980s, 50% of bank funding was with CDs. As of the fourth quarter, it was less than 10%. So the mix is changing.
What I remember about the 1980s, Gerard Cassidy, is you had a haircut and a beard like Bob Seger. That's what I really remember there. You know, the smartest tweet this weekend was from the giant of Chicago, Jim Bianco, where he said, look, it's a 5% world. Everybody get over it. How does the profitability of the RBC Capital Markets stocks you follow, how does the profitability change in Bianco's 5% world?
Tom, it really comes down to, once again, the mix of deposits. And for the banks who've been working very hard and diligently, for the last 20 years and growing those cheap core consumer deposits, the 5% world is very profitable. What investors, they know now, but 6 months ago, people weren't looking at the right side of a bank's balance sheet. That was 15 years ago when rates were higher. But when you have checking account deposits of consumers, and they're basically the consumer's operating account, banks don't need to pay any interest on it because the benefits they're giving to the consumer are obviously the ease of use and as well as making payments, etc. So the point is, in a 5% world, if you have the right deposit mix, like a Brian Moynihan over at Bank of America, this is very profitable for a company like that.
Okay, let's get a window here into the world, the cutthroat world of securities analysis and banking. Keith Horowitz at Citigroup, Gerard. I mean, you know Keith's work suspect. We all know that. He goes out and he puts a buy today on M&T of Buffalo, the best run bank in America. I'm not editorializing there. Gerard, you've got a moonshot on MTB. What will be the catalyst for Horowitz's strong buy and your strong buy on MTB to work out? How do you get the moonshot on a Buffalo bank?
Exactly for that reason, Tom. You want the slow growth, steady eddies that are funded by these cheap core deposits. M&T probably has one of the best deposit bases. They have the grandma and grandpa deposit up in Watertown, New York, that has $5,000 in it. That money's not moving to Marcus, and as a result, they don't need to pay up for it. But second, you also have a company that never extended its duration like its peers in its securities portfolio, and therefore they're earning far more in that portfolio. And then third, you might remember, Tom, they closed on the People's acquisition just over a year ago, and the cost savings from that acquisition will also drive earnings. So they have three drivers. And then lastly, they have one of the few banks that has excess capital. They've been a great steward of shareholders' capital, and they're going to return the excess capital through buybacks.
Gerard, we got to leave it there. Hugely beneficial. Lisa's writing out her buy ticket on Fortress Wilmers right now. Gerard Cassidy with RBC Capital Markets. I mean, this is what about. We're in crisis. What is the intellectual framework to do something, to provide action within the crisis? And that's what Cassidy and the wonderful Keith Horowitz over at Citigroup and others are doing.
Well, there's a distinction between a banking crisis versus a profitability story. And that distinction's been really hard to tease out. It's sort of this question of how profitable can you be lending at a time where it's more difficult to attract some of those cheap deposits. You talk about 5% world being highly profitable. For which banks? How sticky are their assets? These are some of the valuation analyses that people are trying to do to come up with a framework for what to buy and what to sell.
To me, Lisa, and Gerard's making jokes at me. He remembers me wandering around Boston when it was 9 and 10% CDs. We're just at the beginning of this reframe from no interest rates to tangible interest rates. And a lot of people are getting used to this, including swashbuckling Silicon Valley bankers.
Are we going to get toasters?
May they rest in peace.
Toasters or...
Yeah, we're going to get toast. We're going back to green stamps, folks. Stay with us. Bloomberg Surveillance.
governments, we have a responsibility to create the incentives and the space for you to flourish, a receptive environment for change, and the accountability that comes with guardianship. In many nations, the foundation for this approach has been laid for us long ago if we choose to listen. Where I come from, Aotearoa, New Zealand, a beautiful place you must visit, our Indigenous people hold a worldview that every single living and non-living thing is connected. Our people, our plants, our animals, descendants of Ranganui, the Sky Father, and Papatuanuku, the Earth Mother, and their children. And so it follows that people and nature are kin, are family. And we must care for one another in the spirit of kaitiakitanga, which translates into guardianship by the people of the land for the next generation.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Bloomberg Surveillance, Jonathan Farrell, Lisa Bramitz, and Tom Key. Mr. Farrell on assignment through, is it all the week? Or
No,
is he
through Wednesday. He'll be back on Thursday.
through Wednesday?
That's my
One
understanding.
of my interns talked to his people, and he was, I thought he was going to be here when I got back. I was going to wear my beige suit and, bust his chops at a maximum level. It's a 3-island tour, and now I find out John's out for 3 days. What's that about?
The man from Del Monte was supposed to come back
Yes,
and
he was.
be,
He was
full display it instead.
My stylist said, Tom, you're rushing the season. But hey, for those of you on radio, I'm still on the 3-island tour. It was very nice, and major shout out to the people that assisted on the way to the depths of the Caribbean. It was heavy lifting as well.
You were in the jungle. Well, while you were in the jungle and experiencing the beach and calm, there was anything but in the markets. And one thing that people were really trying to reprice was this idea of rate cuts in the face of increased tightening in credit conditions just by virtue of banks having less funding.
Are adults of institutions talking about rate cuts? I think it's just a parlor game.